Governor.
Committee will come to order. Without objection, the chair is authorized to declare a recess of the committee at any time. Without objection, all members shall have 5 legislative days within which to submit additional materials to the chair for inclusion in our record. Well, good morning. Once again, Happy New Year. This is our first markup of 2026. Today, we're considering a series of bills that reflect the committee's continued commitment to reinforcing our financial system, strengthening our national security, and fostering greater economic growth. We want to reverse the curse of the Biden years where we witnessed runaway spending, rising costs, and regulatory overreach. Members of this committee and our Republican conference are working hard to restore growth, opportunity, and accountability to our government. From strengthening our defenses against emerging cyber threats to fostering innovation through artificial intelligence, the bills we have before us today reinforce the foundations of our financial system. Together, they empower the American people by promoting economic security, encouraging responsible innovation, and ensuring that Washington does not stand in the way of growth and opportunity. Looking ahead to the second half of our 119th Congress, we can advance thoughtful, targeted policy changes that strengthen economic opportunity and help the American dream become more attainable for every American family. We have Representative Mike Flood's reauthorization of the Terrorism Insurance Program, extending TRIA. It not only safeguards American businesses, but it ensures our economy remains resilient against potential threats. As we look to the future, the integration of artificial intelligence in financial services and housing become paramount that this gets done in the right way. Representative Brian Stiles' resolution expresses our support for artificial intelligence in financial services and housing on a bipartisan manner. This resolution acknowledges that AI's growing role in these sectors, recognizes both its benefits and the risks, underscoring the need for appropriate oversight, enforcement of existing laws, and consumer protection. To combat the increasing threat of cybercrime in our financial system, we will review Representative Scott Fitzgerald's Combating Money Laundering and Cyber Crime Act of 2025. This bill strengthens law enforcement's ability to address illicit activity tied to digital assets and better protects consumers and our financial institutions. Additionally, today we'll consider Representative Loudermilk's Financial Reporting Threshold Modernization Act, which modernizes the outdated reporting requirements by updating the currency transaction report threshold to reflect inflation and today's changed financial landscape and economy, reducing unnecessary regulatory burdens and allowing businesses to focus on growth. We'll also consider Representative Garbarino, Small Entrepreneurs Empowerment and Development, or SEED Act, which amends the Securities Act of 1933 to allow small issuers to conduct micro offerings free of mandated disclosure or filings. By easing the regulatory burden on small issuers, we empower them to grow and innovate while ensuring that strict anti-fraud protections remain fully intact. We'll consider Representative Dan Muser's Restoring Secondary Trading Market Act, which amends the Securities Act of 1933 to preempt state blue sky laws for off-exchange secondary trading. Streamlining regulations for off-exchange trading creates a more conducive environment for companies that operate, enhances regulatory consistency, and increases investor confidence. Cumulative, these bills take steps forward toward reducing unnecessary regulatory burdens to allow businesses to focus on their core operations while protecting the health and security of our nation's financial system. These bills address the real challenges facing our financial sector while promoting innovation. I look forward to the discussion today on these important bills that work to benefit the American people, and I look forward to delivering on our committee goals and agenda for 2026. I yield back the balance of my time, and I want to recognize our distinguished ranking member. Ms. Waters, you're recognized for a 5-minute opening statement.
Thank you, Chairman Hill. Yesterday, I was joined by committee Democrats at the Supreme Court to stand up for the rule of law and defend the independence of our nation's central bank as Donald Trump and his crooked administration continue their unconstitutional attempt to fire Federal Reserve Governor Dr. Lisa Cook. I'm confident the Supreme Court will do the right thing and uphold the law by rejecting this brazen power grab. But let's be clear, this attack on Governor Cook and Trump's latest attack on the Fed Chairman Jerome Powell is part of a much broader and deeply dangerous agenda. Trump wants to take over our economy and run it like Trump Steaks, Trump University, or any of his other failed and fraudulent businesses, straight into the ground and into his pockets. From gutting the CFPC to derailing our housing agency, it's clear he wants to weaken independent institutions and rig the system for his own political and financial interests. At a moment when millions of Americans are being crushed by an affordability crisis that Trump himself created, his administration has chosen not to provide relief. Instead, Trump has raised taxes and imposed sweeping tariffs, making groceries and housing more expensive. And he has launched an all-out assault on the protections that safeguard consumers, workers, retirees, homeowners, and small businesses from fraud, abuse, and financial collapse. Unfortunately, Trump has plenty of willing accomplices in Congress to abet him in this grift against the American people. Today, Republicans are advancing a slate of proposals that weaken our banking system, undermine national security, and allow bad actors to slip through the cracks, all while increasing harm to investors. Now, let me be clear about what that means in practice. At a time when scams, fraud, and financial crime are surging, Republicans are using this markup to advance proposals that would curtail banks reporting suspicious activity and making it easier for criminals to avoid detection. I'm not aware of any American asking Congress to weaken tools used to combat terrorism, drug trafficking, human trafficking, and financial exploitation. In fact, Trump's own FBI says that one of the bills today would, quote, severely limit the FBI's visibility into potential illicit financial activity, and quote, I do support the bill to authorize the Terrorism Risk Insurance Act being considered today. I applaud the chairman for ensuring this bill garners bipartisan support, something prior Republican chairs failed to do. Passing TRIA is essential to unlocking economic development, supporting construction, and sustaining growth in communities across this country. At the same time, I'm pleased that the committee is focused on artificial intelligence. Responsible AI requires strong consumer protections, preserving state laws, and preparing our economy and institutions for the changes ahead. Committee Democrats are fighting for a strong economy that works for all Americans and not the wealthy and well-connected. That means supporting community lenders who serve consumers, not Wall Street CEOs. It means ensuring our capital markets work for small businesses, investors, and workers alike. And it means protecting the independence of the Federal Reserve from Donald Trump's illegal takeover. Let me close with this. After calling it a hoax and a scam, Trump appears to see how his failed economic policies are hurting Americans and has put forward proposals to try to make things more affordable, from proposing to cap interest rates, to reduce credit card swipes, to banning private equity from buying homes. I would hope Republicans would also take up similar proposals to reduce costs for Americans and abandon their agenda to enrich fraudsters, billionaires, and Wall Street. However, you never know what Trump is going to do from day to day. One day he's proposing something, the next day he changes his mind. The next day he don't remember what he said the first day or the second day. However, committee Democrats will always stand up for consumers, families, and businesses, and we will always push back against this
Gentlewoman's time
administration.
has expired.
Reckless efforts to throw out our communities, our markets, and our economy to chaos. I yield back the balance of my time. Thank you, Mr. Chair.
Your time plus has been yielded back. Thank you so much. Pursuant to notice, I call up H.R. 7128, the TRIA Program Reauthorization Act of 2026, which was introduced by the chair of our Housing and Insurance Subcommittee, Mr. Flood. The clerk will report the bill, which was distributed in advance.
HR 7128 to extend the terrorism risk insurance program and for other purposes.
Without objection, the bill is considered read and open to amendment at any time. Representative Flood has an amendment in the nature of a substitute, copies of which were distributed in advance. The clerk will now report that amendment.
An amendment in the nature of a substitute to HR 7128 offered by Mr. Flood of Nebraska, designated as TRIA Extension ANS.
Without objection, the amendment is considered read, will serve as the base text for the purposes of amendment. The gentleman from Nebraska, the Housing and Insurance Subcommittee Chair, Mr. Flood, you're recognized on your ANS for 5 minutes.
Thank you, Mr. Chairman. I also want to thank my co-lead on this legislation, Congressman Andrew Garbarino, who is also the chairman of the House Homeland Security Committee. This legislation would reauthorize the Terrorism Risk Insurance Program through 2034, an extension of 7 years beyond when the program is currently scheduled to lapse. Before the Terrorism Risk Insurance Act of 2002 was adopted, terrorism risk was incorporated directly into the underwriting of commercial property and casualty insurance. However, after the horrific attacks of September 11, 2001, terrorism risk seemed much more difficult to underwrite. Since its inception, TRIA has been authorized 4 separate times: 2002, 2007, 2015, and again in 2019. In September of last year, the Housing and Insurance Subcommittee held a hearing on the Terrorism Risk Insurance Program. We had a selection of witnesses that brought a wide variety of perspectives on the program and how the program has operated since its inception in 2002. However, during that hearing, we heard over and over again a similar theme from nearly all of them. In order to provide maximum stability and certainty to the terrorism risk insurance market, Congress should work towards a long-term reauthorization and complete its work well before any potential lapse in 2027. Our committee is doing just that. If we are able to advance the legislation before us in the committee today, we can work towards final passage on the House floor and hopefully get the extension signed into law later this year. This legislation does make a handful of minor changes to the Terrorism Risk Insurance Program, all of which are intended to make the program work better for insurers and, importantly, policyholders. Specifically, the amendment in the nature of a substitute makes 2 changes to the certification process that determines whether an event qualifies as an act of terror pursuant to TRIA. Number 1, it raises the amount of property and casualty insurance losses that must result from an act for it to be considered terrorism risk insurance eligible from $5 million to $10 million, which updates that threshold to current levels of inflation. Number 2, it also provides a deadline, or call it a shot clock, for the Department of Treasury to certify whether an event is actually an act of terror. That process would work as follows. First, Treasury would publish its intent to examine a potential event more closely in the Federal Register. Second, after 90 days following publication of that notice in the Federal Register, Treasury would need to come to a decision about whether that event qualifies as an act of terror. Both the threshold change and the shot clock will provide greater clarity to policyholders and insurers on what constitutes an act of terrorism covered by the program. Other than those 2 minor changes, the bill is straightforward and more or less a clean extension of the program. My hope is that we can consider this legislation quickly and efficiently without too much controversy. I'd also ask unanimous consent to enter the following statements into the record indicating strong support for the TRIA Program Reauthorization Act of 2026 and encourage advancing the legislation to the full House without delay. We have a letter from the Reinsurance Association of America, a letter from the Council of Insurance Agents and Brokers, a letter from Building Owners and Managers Association, and a news release statement from the American Property Casualty Insurance Association.
Without objection, those will be put in the record.
I yield back.
Gentleman is back. Who seeks recognition on the ANS?
Mr. Chairman,
The gentlewoman from New York, you're recognized to strike the last word.
Thank you. I move to strike the last word.
You're recognized for 5 minutes.
Thank you, Mr. Chairman. The terrorist attacks on September 11th, 2001 were the deadliest act of terrorism in human history. As a New Yorker and an American, I will never forget the tragic events of that day. In New York City, we lost more than 2,700 souls when the Twin Towers collapsed. In the years since, it has been concluded that more than 1,140 additional people who either worked, lived, or studied in Lower Manhattan has been diagnosed with cancer due to exposure of toxins at ground zero. Passed in the aftermath of September 11, the TRIA program was created to help Lower Manhattan and New York City rebuild. Prior to the 9/11 attacks, commercial insurance policies typically covered terrorism losses as they would other perils and without additional costs to the policyholders. But the 9/11 attacks were a shock to the overall economy and the insurance industry in particular. The insured losses on all insurance lines from the attacks were estimated at approximately $60 billion in current dollars, well above the costly natural disaster that had occurred at that time, and approximately 4 times the combined property insurance losses on the rest of the 20 largest terrorist attacks. Responding to the disruptions in the insurance market and fearing a wider downturn in the economy, we established the TRIA program as a reinsurance backstop to calm markets and give the industry time to collect the data and the capacity necessary for private sector to the risk. Initially passed as a temporary measure, the program has been reauthorized multiple times, and it remains clear to me that we continue to need the TRIA program, not just for New York, but for the entire country. The relative calm that we have seen in the insurance market for terrorism coverage is underpinned by the existence of the program. Insurers are required to offer terrorism coverage under the Act, and it seems possible, if not likely, that insurers would again seek to exclude terrorism losses if this requirement were to be removed. Now, that doesn't mean the program should continue to be reauthorized without any reexamination. We must always look under the hood to see if programs are functioning properly, and that includes TRIA. We have had lengthy discussions about the changes we're making here today and believe we have arrived at a good place. We have moved the trigger threshold to $10 million to adjust for inflation and delayed the date of effectiveness until 2029, allowing the industry time to model for this adjustment. If models indicate significant changes in premium have resulted because of this change, pushing back the date to the new trigger until 2029 give us time to make adjustments. The changes we're making to the certification window will require the Treasury Department to begin the process of determining whether to certify an event as an act of terrorism within 30 days. As ranking member of the House Small Business Committee, I can tell you that small businesses want certainty, a 30 days notice requiring for the Treasury Department to indicate whether they are investigating an act as act of terrorism provides small businesses with some certainty on whether their claim will be paid out through the program. Lastly, and perhaps most importantly, the bill we're marking up today moves the legislation forward and begins the process of recertifying the program, which carriers, reinsurers, and brokers have all told me must happen right away. If edits to this text need to be made as we move to the floor, we're eager to work with all parties on a bipartisan basis on those adjustments. I urge my colleagues to vote yes on this bill and yield back the balance of my time.
Gentlewoman yields back. Who seeks, Mr. Rose seeks to strike the last word.
Mr. Chairman, I move to strike the last word.
You're strike the last word. You're recognized for 5 minutes.
Thank you, Chairman Flood and Chairman Hill, for your work on this legislation. At the outset, I think it's important to recall exactly what Congress intended when it created the Terrorism Risk Insurance Act, or TRIA. The statute laid out that the program was established to provide for a transparent system of shared public and private compensation for insured losses resulting from acts of terrorism in order to, 1, protect consumers by addressing market disruptions and ensure the continued widespread availability and affordability of property and casualty insurance for terrorism risk, and 2, allow for a transitional period for the private markets to stabilize, resume pricing of such insurance, and build capacity to absorb future losses while preserving state insurance regulation and consumer protections. That's the law's own language. And the key phrase here is temporary federal program. TRIA was never meant to be permanent. Never meant to be permanent. It was designed to give the private market time to adjust, mature, and ultimately take full responsibility for insuring against terrorism risk. Yet here we are, 20-plus years later, marking up another long-term reauthorization that continues to rely on federal involvement instead of meaningfully reducing it. I have great respect for my colleagues who have worked hard on this proposal, but I believe that H.R. 7128 misses an opportunity. Rather than putting TRIA on a path toward less government and taxpayer exposure and greater private sector responsibility, this bill extends the federal backstop for another decade, giving, I think, import to Ronald Reagan's old statement that the closest thing to immortality on this earth is a government program. We are proving that today. To put that in perspective, under this bill, TRIA would remain in place until December 31st, 2034, nearly 9 years from now. That's hardly consistent with the statute's intent of providing a transitional program. This is especially concerning given that to date, TRIA has never been activated. In the 20-plus years since TRIA was enacted, thankfully, there has not been a single Treasury-certified act of terrorism that met the program's financial trigger. Not once has the federal government been required to step up under TRIA. That's a good thing. Meanwhile, the private insurance market has done very well in this space. Very well indeed. According to the Treasury Department, between 2003 and 2023, insurers earned approximately $56.7 billion in terrorism risk insurance premiums. That's a strong indication that insurers have both the experience and capacity to manage this risk without an ongoing federal backstop. Yet instead of taking steps to scale down taxpayer exposure or implement a glide path for eventual federal exit, this bill simply extends the program largely as is. This is deeply disappointing for those of us who believe the federal government should not be permanently backstopping risk the private sector is capable of handling on their own. The continued reauthorization of TRIA without meaningful reform runs counter to sound fiscal stewardship. As policymakers, we have a responsibility to safeguard taxpayers from bearing undue financial risk, especially when there is little evidence of current market failure or a pressing need for federal intervention. I want to thank Chairman Flood and Chairman Hill again for their leadership and their efforts to maintain stability in this space. I also appreciate their willingness to engage in this important discussion. However, I cannot support a reauthorization that extends TRIA's federal role for another 7 years beyond the current reauthorization, or nearly 9 years from today, without a plan to ultimately wind it down. TRIA was meant to be temporary. Instead, it's becoming indefinite, maybe permanent. It's past time to begin the process of responsibly transitioning this market away from taxpayer support and toward a fully private-based model. For these reasons, I will be opposing H.R. 7128 in its current form. Thank you, Mr. Chairman, and I yield back.
Gentleman yields back, who seeks recognition on Mr. Flood's A&S. The gentleman from Missouri.
Thank you, Mr. Chairman.
Mr. Weaver, you're recognized to strike the last word.
We'll strike the last word. Mr. Flood presented an entire list of those who are endorsing this effort. and I would just like to have included the National Association of Mutual Insurance Companies.
That would be included in the record without objection. Are you?
I yield back, Mr.
Gentleman yields back. Who seeks recognition? Gentleman from New York, Mr. Garbarino.
Move to strike the last word.
Gentleman's recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to my colleague, Chairman Flood, for leading on this. I urge all my colleagues to join me in supporting H.R. 7128, the TRIA Program Reauthorization Act of 2026, which extends terrorism risk insurance through 2034. Terrorism Risk Insurance Act was created in response to a clear and urgent market failure in the aftermath of the September 11th terrorist attacks, which resulted in approximately $45 billion in insured losses. Insurers and reinsurers determined that terrorism risk could not be reliably modeled or priced. Because of this, the uncertainty caused the market to react quickly. Premiums surged, coverage was withdrawn, and entire sectors of the economy left exposed. These disruptions were especially severe in high-risk, high-density regions like New York, where commercial real estate, transportation systems, and large employers depend on affordable and predictable terrorism coverage. Projects stalled, financing became more difficult to secure, and employers faced uncertainty not because of economic weakness, but because insurance markets could not absorb the risk. For regions like my district on Long Island, whose economy is deeply integrated with New York City, these market disruptions had real and lasting consequences for development, employment, and investment. Congress responded by enacting TRIA in 2002 as a federal backstop, designed not to replace the private market, but to stabilize it. The program restored confidence, encouraged private capital to re-enter the market, and allowed insurers time to rebuild capacity and improve risk assessment. Congress has since reauthorized the program in 2005, 2007, 2015, and 2019 in recognition of the reality that terrorism risk remains difficult to predict, can cause widespread losses all at once, and potentially catastrophic in ways that continue to challenge purely private insurance solutions. As a result, TRIA has served an important and effective stabilizing mechanism that supports the availability of terrorism risk insurance across key sectors of the economy. TRIA also supports broader public interest, including law enforcement and national security. Stable terrorism risk insurance enables state and local governments, transit authorities, and operators of critical infrastructure to invest in security, resilience, and coordination with law enforcement rather than diverting resources to manage uninsurable risks. It is also important to emphasize that uncertainty surrounding TRIA's future can itself disrupt markets, which is why I'd like to commend the committee for beginning this process well before the program's expiration at the end of 2027. Policyholders and insurers need at least 1 year of certainty to renew coverage, negotiate multi-year policies, and secure financing tied to terrorism risk insurance. Even the prospect of a lapse can lead to higher premiums, reduced coverage availability, and delayed investment decisions well before any expiration actually occurs. This reauthorization bill directly addresses that risk by extending TRIA for 7 years, providing insurers, policyholders, and the broader financial system with the long-term certainty needed to support underwriting, lending, and development decisions. History shows that markets begin to react well in advance of a sunset date, and delaying action risks higher premiums, reduced availability, or contract exclusions. Reauthorizing TRIA before the end of 2026 is therefore critical to avoiding unnecessary disruption, particularly for long-term insurance arrangements, financing agreements, and development projects that depend on predictable coverage. For these reasons, I strongly support the reauthorization and encourage my colleagues on both sides of the aisle to join me in voting for this important bill. And Mr. Chairman, I ask unanimous consent to enter the following statements into the record indicating strong support for the TRIA Program Reauthorization Act of 2026 and encouraging advancing legislation to the full House without delay. And that includes a letter from the Coalition to Insure Against Terrorism, a letter from the National Association of Realtors, a letter from the American Bankers Association, and a letter from the National Association of Mutual Insurance Companies.
Without objection, those will be made part of our record.
Thank you. I yield back.
Gentleman yields back.
Yes.
Who seeks recognition? Mr. Lynch?
Thank you, Mr. Chairman. I wasn't planning on speaking on, I asked for 5 minutes.
Gentleman's recognized for 5 minutes.
Okay.
Strike the last word.
Yeah, no worries. I wasn't planning to speak on this, but I was elected on September 11, 2001, the day of the attacks. One of the first bills that and I came onto this committee shortly thereafter, and one of the first major pieces of legislation we considered was this bill on TRIA. And in the midst of that, we were also meeting with the families of firefighters, flight attendants, people who had lost their lives on September 11th. And the fear in the business community was that even though the private insurance industry was able to cover the losses of that attack, that they would not be able to do so in the future, especially those businesses that operated large sporting arenas, large venues where a lot of people would gather. The colossal and catastrophic damages that would result from a terrorist attack of that nature on a facility like that would make it impossible for them to operate. So the fact that we have not had to pay out since September 11, 2001, since after that attack, is it should not be a negative. It should be a positive. The debate over this bill, TRIA, was always about where are we going to put the backstop? How much of the cost of a terrorist attack would we require the private insurance companies to pick up? And then when it just became so massive, would we just say, okay, the people at the end of the line, there would be no resources for those families whose family members may have been killed or seriously injured. And instead we said, no, we're gonna back that up. After the private insurance industry picks up a huge amount of the damages, then the government will stand in line behind that to make sure that every family who loses a loved one would be compensated, at least in a way that gave them a chance to survive, to continue in the midst of all that anguish and loss. So that was the dynamic behind this bill in its first iteration. We can argue about where that backstop should be, but I think especially today, when miniaturization of some weapon systems actually presents a greater danger today than it did back in 2001. I worry greatly about terrorist organizations getting weapon systems that could do catastrophic damage to parts of our country and to facilities within our country. We enjoy great freedoms, and I think that this bill maintains. We can still argue about where that backstop should be. There should be a significant level of coverage for private insurers. But remember, these arena operators and mall operators, where you have massive amount of people, they're buying this insurance because they believe they need it. They need it. That they would not be able to exist if there was a major terrorist event at their venue. And they're buying this insurance so that if anybody comes into that arena or into that mall and suffers the victimization that we saw on September 11th, that at least those families will be protected and that they will fulfill their obligation to make sure that whoever takes a seat in that stadium or in that mall knows that there's some level of protection of them that is completely beyond the normal expectations of any proprietor or any operator of one of those stadiums. So I understand the gentleman's frustration with where the line is drawn, but I think that the drafters, and it was a bipartisan effort here, they've done their very, very best to create that balance, and I hope members support this bill, and I yield back.
Gentleman yields back. He seeks recognition. Gentleman from Oklahoma.
Chairman, wish to strike the last word.
Gentleman's recognized for 5 minutes.
Thank you, Mr. Chairman. My colleague did a really amazing job of describing what we went through as committee members in 2001, and the ranking member remembers this. But before 2001, I had been a member for 11 months. I'd been a member of this committee for 5 months when we had an act of domestic terror in Oklahoma City, where deranged people created a massive truck bomb and took the lives of 168 good citizens and destroyed millions of dollars worth of property. The president and congressional, bipartisan, bicameral leadership at the time responded that that was an attack on the United States of America, and we stepped up. 9/11 was an act of international terror, but it was an attack against all of us in this country. And once again, we stepped up. There was acknowledgement in the debate at the time that the insurance industry would have to adjust their expectations, their potential liabilities, and the fees they would charge for coverage to reflect what had happened in Oklahoma City and what had happened in New York City and what might happen the next day or the next day down the road. We understood that we were not going to let our fellow citizens suffer, and we wanted to be practical, as Mr. Lynch stated, about giving the insurance companies certainty so that they could adjust their rates to reflect the help that would come in a catastrophic event. This has been good legislation that has worked amazingly well. Tweaked on every reauthorization, of course, like all good legislation should be, but amazingly well. If you let this expire in a world that continues to be unstable and dangerous, then you'll compel all the entities who look at these potential exposures to try and factor this into their costs, and we will all pay dramatically more. It's been 25 years since the tragedy in New York City, but we don't know what happens tomorrow or the next day or 5 years from now. This legislation is necessary and must be maintained, and those of us on the committee who worked on it in the beginning understand that, and those of us who've been exposed to the tragedies when these occur understand that. With that, I respectfully yield back, Mr. Chairman.
Gentleman from Oklahoma yields back. The chair recognizes the ranking member to strike the last word.
I move to strike the last word.
Gentlewoman's recognized for 5 minutes.
I'm pleased that today we're considering H.R. 7128 to reauthorize the Terrorism Risk Insurance Act, or TRIA, for 7 years. I would like to thank Chairman Hill and his staff for working with me and my staff to ensure long-term certainty and availability of affordable terrorism risk insurance coverage across our country. This coverage is critical for small businesses, hospitals, universities, nonprofits, and others that rely on this critical federal program. This TRIA legislation is a bipartisan bill, as it has been in recent reauthorizations. As chairwoman of this committee, in 2019, I led the last reauthorization, which was the longest and have supported previous reauthorizations. TRIA was first enacted after the September 11 terrorist attacks, which resulted in the largest insured losses from a non-natural disaster on record. After that, tourism risk insurance all but disappeared, and any coverage that could be afforded was extremely expensive. Without tourism risk insurance, commercial reconstruction stalled. In response, Congress passed TRIA in 2002 to ensure the availability and affordability of terrorism risk insurance and provide a federal backstop in the event of catastrophic losses. Since then, the program has effectively done just that. TRIA is set to expire at the end of 2027, and marking it up now will offer certainty to policymakers moving forward. This legislation will provide a long-term reauthorization through 2034 and make targeted but sensible updates to the program. Mr. Chairman, it is also my understanding that Treasury may still have technical assistance to provide on the bill that we may need to explore, and I'm pleased you have agreed to do so. I would also like to thank Chairman Flood, Ranking Member Cleaver, Congresswoman Velasquez, and Congresswoman Presley for their efforts to work on this bill today. So I hope we can quickly act to move this bill forward and would urge all my colleagues to support this legislation. I thank you and I yield back.
Gentlewoman yields back, who seeks recognition on Mr. Flood's A&S. Seeing no other members, I'll recognize myself for 5 minutes to strike the last word. TRIA remains an important way that we can manage the inherent risks of terrorism and terrorist risk in our economy. It's helped us reconcile that threat is always now part of our life, as Mr. Lynch just noted, whether you're in Boston, the Big Apple, or in Little Rock. We've used the reauthorization process to look critically at TRIA to see how it meets our needs and what adjustments should be made in order to accomplish the twin goals of providing market certainty and stability. That's why we work with Ranking Member Waters on ideas to fine-tune the program, just as she did as chair in 2019, to continue to provide greater clarity now as to what would happen if the program were ever activated. We've sought feedback from members and from others as we move quickly to get out in front of this program's scheduled expiration of December 2027. So everyone has a chance to review and debate improvements on this bill. The last thing I want to do as Congress is be debating this bill in November of 2027. As noted in Mr. Rose's statement, Congress always has the responsibility of scrutinizing this programming and considering on a bipartisan basis how to structure it. The changes in Mr. Flood's bill are certainly not groundbreaking per se, but represent reasonable efforts which show that the realities of the threats evolve too, and as they evolve, the program should evolve. So let's keep in mind the fundamental purpose of TRIA, which is clear in the original 2002 law, as so eloquently spoken to by Lucas Lynch, Velasquez. Section 101B states TRIA is designed to provide for a transparent system of shared public and private compensation for insured losses resulting from acts of terrorism in order to protect consumers. That's the goal here, to give policymakers, policyholders access to the financial protection they need to build buildings, construct malls, employ workers, and run our economy. As time has passed, quirks in TRIA have appeared, making it harder for those policyholders to get their claims paid quickly and fully, and left insurers adrift in the lurch of what some would describe as a clunky will they, won't they certification process. As Ms. Presley observed at our September hearing, the 2013 Boston Marathon bombing left businesses waiting for weeks, months, and ultimately more than a year to learn if Treasury would classify the event as a terrorist attack. Ask yourself, is that fair to those businesses along that marathon route? And is that good for the economy? Instead of providing certainty and stability, we saw how some events, particularly ones that do horrible damage, but not large commercial property and casualty losses, can put insurers and policyholders in a bind as everyone tries to do the right thing under that uncertain certification process. At that same hearing, Representative Mike Lawler stressed the need to have both clear rules and expectations for policyholders and insurers. And our witnesses all agreed, testifying that having clear rules and certainty is critical for both the insurance companies doing the underwriting, providing the coverage, and the business community that really needs the required coverage. And that just makes sense. No one wants a program that promises policyholders one thing and delivers another, or worse, doesn't deliver at all. Chairman Flood's bill proposes a modest set of improvements that will add that clarity to the certification process and makes it easier for insurers to pay their claims in a more timely manner and policyholders to recover financially when they need those payments the most. The bill before us is a solid bill with reasonable improvements to an important program that everyone on both sides of the aisle should support. As the process continues, I commit that we're going to try to keep discussing these issues on how to make TRIA better, more effective, so it meets the diverse needs of all of its participants. I support Mr. Flood's A&S, the underlying bill, and I urge its passage, and I yield back the balance of my time. Does anyone seek recognition on the A&S? Hearing none, we'll move to amendments. Does anyone wish to offer an amendment to the A&S?
Mr. Chairman, I have an amendment at the desk.
Mr. Rose has an amendment at the desk. We'll pause while it is distributed.
Mr. Chairman,
Mr. Lucas.
serve with point of order on the amendment.
Mr. Lucas reserves a point of order. It's the chair's intention to hear from Mr. Rose on his amendment, and then we'll adjourn to the House floor for votes and then come immediately back and continue debate on Mr. Rose's amendment to Mr. Flood's A&S. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 7128 offered by Mr. Rose of Tennessee, designated as Rose TN 045.
Without objection, the amendment is considered read. The gentleman from Tennessee, Mr. Rose, is now recognized for 5 minutes to describe his amendment.
Thank you, Mr. Chairman. I must say, and I know you probably share my disappointment at the lackluster attendance for this important hearing this morning. I'd like to take a moment to briefly explain my amendment, which is intended to make some measured good governance improvements to the underlying TRIA bill and better protect taxpayers over the long term. Like so many of my colleagues this morning, I understand and herald the success of this program in providing a much-needed temporary backstop. My amendment makes 4 key changes. First, it reduces the federal cost share. Under current law, the federal government covers 80% of covered losses above insured deductibles. My amendment would reset that share to 75% and then reduce it by 1 percentage point a year until it reaches 70%. This is a gradual, predictable glide path that gives insurers time to adjust while steadily reducing the federal exposure and putting more responsibility back on the private market. Second, the amendment raises and modernizes the program trigger. Right now, the trigger remains at $200 million. My amendment would increase that trigger by $10 million per year until it reaches $250 million. Once that level is reached, the trigger would be indexed for inflation using a benchmark selected by the Treasury Secretary through a rulemaking process. That ensures the trigger keeps pace with economic conditions instead of shrinking in real terms and quietly expanding the federal role over time. Third, my amendment shortens the length of the reauthorization. Instead of adding 7 years to the end of the current authorization, which effectively results in nearly a 9-year reauthorization, it changes the program termination date to 5 years from enactment. 5 years provides plenty of certainty for markets, but it also reflects the fact that TRIA was supposed to be temporary and that Congress should routinely revisit the scope of federal involvement. Fourth, the amendment directs a serious study at Treasury on a participation fee, something this committee has considered in the past before I was a part of the committee, a dedicated fund and a possible small insurer opt-out. Treasury would be required to evaluate how an annual participation fee of insurers in TRIA could be structured, including options that would generate substantial aggregate fees and place them into a dedicated fund within the Treasury that can be used solely to pay future federal outlays or reimbursements under the program. The study must look at fee structures that are proportionate to insurer size and premiums to avoid unduly burdening small and regional insurers, and it must assess whether allowing small insurers to opt out of the mandatory availability requirement could work without undermining the long-term health of the program. Treasury would then report back to this committee with findings and legislative options so we can consider additional reforms with real data in hand. The common thread here is simple. TRIA was created as a temporary program to provide a transitional period for private markets to stabilize, resume pricing terrorism risk, and build enough capacity to absorb future losses. Over time, however, TRIA has come to look more and more like a permanent federal backstop. In any reauthorization of TRIA, we have an obligation at minimum to take concrete steps toward the program's original goal, transitioning away from federal involvement. My amendment does not pull the rug out from under anyone. It takes modest, measured steps to reduce the federal share, raise the index raise and index the trigger, shorten an overly long reauthorization, and begin a serious conversation about a participation fee and a fund that can better protect taxpayers. If we truly believe this program was never meant to be permanent, then we have to start somewhere. My amendment is a practical way to begin that process, to put TRIA on a path to less government involvement and to build and to better shield taxpayers from potential future losses. I urge my colleagues to support the amendment, Mr. Chairman, and I yield back.
The gentleman yields back. Does the gentleman from Oklahoma insist on his point of order?
Mr. Chairman, I, by a unanimous consent request, would withdraw my point of order.
As I previously thanked the gentleman that his point of order is withdrawn, as I noted a minute ago, pursuant to the previous order, the chair declares the committee in recess, subject to the call of the chair. We will reconvene immediately after floor votes. Let me emphasize that word, immediately after floor votes. Committee stands in recess. The committee will come to order following our recess for votes. Is there additional debate on Mr. Rose's amendment? If there's no further, I'm sorry, Mr. Flood, Chairman of the subcommittee, you're recognized to strike the last word.
Thank you, Mr. Chairman. While I truly respect the sentiment behind this amendment, unfortunately, I can't support it. The TRIA Program Reauthorization Act of 2026 is the product of a bipartisan collaboration after the Housing and Insurance Subcommittee's hearing in September of last year. The bill is intended to provide stability to the terrorism risk insurance market and prevent a lapse in coverage going into next year. Listen, I understand the concerns of my colleague, Congressman Rose. I also want to ensure that we limit the taxpayers' exposure to any potential risk from this program. However, I do think we have to be mindful that we have a delicate balance to maintain with the program. I agree that we absolutely must protect the taxpayer from potential losses, but we also must keep in mind the potential for negative consequences in an environment where it is absolutely difficult to attain coverage or coverage is priced at such a premium that it's prohibited. Taking a look at history can be a useful guide here. In the aftermath of the 9/11 attacks, the terrorism risk insurance program did not exist. And as a result, property owners affected by the attacks largely relied on commercial insurance to cover damages. When it came time for policyholders to file claims on the very extensive damage from those attacks, many of them were locked into litigation for years before they were able to secure repayment. Even worse, after the attacks, insurers stopped covering terrorism risk altogether. So if we don't have a terrorism risk insurance program, we do run the risk that more commercial real estate goes uninsured altogether, which could create a disastrous situation in the event of an attack that I hope never, ever, ever, ever happens. Sadly, such an environment may not take taxpayers off the hook either. In the event of a serious and damaging attack, there would likely be enormous pressure for Congress and the federal government to intervene with relief. Again, I understand the sentiments behind this bill, or behind Mr. Rose's amendment. I agree that we must limit taxpayer exposure through the reinsurance program, but we also have to consider the implications of dramatic changes to the program structure that could lead to some unintended consequences. For those reasons, I urge my colleagues to vote against this amendment, and I yield back.
Gentleman from Nebraska yields back. Is there any further debate? Hearing none, the question now occurs on the amendment by Mr. Rose. All those in favor of the amendment shall signify by saying aye. All opposed signify by saying nay. Nay. In the opinion of the chair, the nays have it.
Ask for a recorded vote.
The nays have it, and the amendment is not adopted. Mr. Rose has, Mr. Rose has requested a recorded vote. All those in favor of a recorded vote, raise your hand. Sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. We'll now move to the next amendment. Is there an additional amendment? The gentlewoman from Texas.
Mr. Chairman, I have an amendment at the desk.
We'll pause while it's distributed.
Mr. Chairman,
Mr. Lucas.
I seek a point of order on this amendment.
Gentleman reserves a point of order on the amendment. Thanks, sir.
An amendment to the amendment in the nature of a substitute to H.R. 7128, offered by Ms. Waters of California. This is the wrong amendment.
It's Ms. Garcia of
Judge
Texas. Or is this the right one? Here's what she passed out.
Wrong amendment.
Stand by.
Ms. Garcia's amendment?
Just a moment. I believe we should have had a Garcia amendment distributed, not a Waters amendment. Please just take a moment. Could we hear from the clerk reporting the Garcia amendment?
An amendment to the amendment in the nature of a substitute to H.R. 7128, offered by Ms. Garcia of Texas, designated as TRIA Amend 1.
Well, without objection, the amendment is considered read, and the gentlewoman from Texas, Ms. Garcia, you're recognized for 5 minutes to describe your amendment.
Thank you, Mr. Chairman. My amendment is simple. It would require TRIA to also cover losses incurred by a U.S. citizen because of U.S. Immigration and Customs Enforcement. TRIA, at its core, ensures losses after tragedies. Mr. Chair, there have been a lot of tragedies and deaths over the past year. The one that stands out the most, of course, is the death of a U.S. citizen, Renee Good. A 37-year-old mother of 3, Good was shot and killed by an ICE agent in Minneapolis on January 7th. Trump calls it a mistake, but it sure didn't look to me like a flat-out murder at the hands of U.S. federal officers. In addition to death, ICE activity like raids and raids have halted operations, impacting businesses and communities as sales decline and productivity is reduced. As we sit here today talking about ways to help businesses, especially small businesses, we cannot ignore the real impact and harm that ICE is causing to our communities, businesses, and their properties. Houston, Minnesota, Chicago, Portland, Los Angeles, New York City, the list goes on. If my colleagues are insistent on voting to help American citizens, well then let's be fair to everyone. Mr. Chairman, you yourself have said that it's only fair to businesses on the marathon route after the Boston Marathon incident. Well, I would submit to you that it would be only fair to help those businesses that are in the line of fire anywhere near ICE or any of their raids or any of the activity that they're doing in these cities. If our government, if it's not the government and if not TRIA, then who is going to help rebuild their businesses that are destroyed? We're getting reports of many restaurants and retail owners having to shut down during this raids and during the occupation of cities across America. Who is going to help them with their losses? Who's going to help them rebuild their communities? Who's going to help them be able to train and rehire the workers that they're going to need since so many of them have been displaced? I urge my colleagues on both sides of the aisle to be fair to everyone, to support this amendment, and with that, I yield back.
Gentlewoman yields back, who seeks recognition. Just a moment, Mr. Flood. Does the gentleman from Oklahoma still insist on his point of order?
I would like to withdraw, Mr. Chairman, my point of order.
Gentleman withdraws the point of order. Mr. Flood, you're recognized.
Thank you. Move to strike the last word.
Gentleman's recognized for 5 minutes.
I'll be very brief. With all due respect to the gentlelady from Texas, this amendment in the nature of a substitute in front of us is the product of a bipartisan effort to address something that has been addressed 4 times prior, and that's the reauthorization of TRIA. The chairman of this committee and the ranking member have fostered a committee full of bipartisanship, and this work product in front of us represents that spirit of bipartisanship. And for that reason, I urge my colleagues to reject the amendment and vote for the underlying amendment in the nature of a substitute. I yield back.
Gentleman yields back, who seeks recognition to talk about Ms. Garcia's amendment. Ranking member.
Thank you, Mr. Chairman. I move to strike the last word.
Gentlewoman's recognized for 5 minutes.
We're here today to reauthorize a program that offers a federal backstop for losses that are beyond the control of Americans. And Ms. Garcia's amendment would accomplish just that by making U.S. citizens whole, again, after they sustained property losses caused by ICE and its agents. President Trump is having thousands of ICE agents descend on our cities, using brutal force to hunt, harass, and harm those in our communities. Whether intended or not, U.S. citizens and their businesses and property, shop holders and small business owners who are American citizens are caught in the middle of the reckless and inappropriate responses of ill-trained ICE agents, only to be left with broken windows and damaged storefronts to repair. Who pays for this? Workers and families, also U.S. citizens, drive home at the end of the day only to be snatched out of their cars by masked men with tactical gear and wind up with their windows smashed in. Who pays for this? This Sunday in St. Paul, Minnesota, over a dozen ICE agents broke down the front door of a napping U.S. citizen. They forced and trampled their way into his home, pointing their guns and yelling at his family, while this 4-year-old grandson cried. He was led out in handcuffs and into the freezing cold after the damage they did to his home. ICE agents refused to let him get identification to prove he was a citizen, only to realize their mistake hours later and return to him. Who's paying for his broken door and the damages to his home and trauma to him and his family? And of course, who will compensate the family of Renee Good, whose murder was filmed for the whole world to see? Mr. Chairman, the people living in this country should not be treated like this and should certainly not be expected to pick up the tab after they have harassed and hurt from out of control and ill-trained ICE agents. This amendment would correct that and make sure they don't have to pay. I was not aware of this amendment. This is a great amendment. This is a sensible amendment. This is an amendment that the American people deserve. I want to tell you, I know that the president is anxious to do more deportations, and some of the members on the opposite side of the aisle support that. But I also think there must be some of the members on the opposite side of the aisle to know that these untrained ICE agents, many of them leaving as guards from the prisons where they operate quite differently, a big initiation fee for them to come of $50,000 and join, no matter where they come from, what their backgrounds are. I know that's not what you intended for deportation. It is all right if you believe what the president believes, but for God's sake, you know, we have American citizens who are being killed. Now, I want to say this today, and I want it to be remembered. The president is increasing not increasing, but initiating armed services to go into Minnesota. The mayor of Minnesota said he's in charge of the National Guard. He's going to call out the National Guard. What are we going to have? A front-off between ICE and the National Guard? Is this the start of a civil war that the president has alluded to? Republicans on the opposite side of the aisle, you can do better than this. You can stand up for Ms. Good, who was killed, the mother of 3, an American citizen, other American citizens, people who look like they think should be deported, people of color, American citizens who are brown, who are yellow, who are black, et cetera, et cetera. Stand up for the citizens of this country. Otherwise, you're going to see a civil war that is being created between ICE and the National Guard. You don't want to see that in this country. Ms. Garcia, this is a wonderful amendment. It is a great amendment, and I hope that we can get some support for this amendment. I yield back the balance of my time.
The gentlewoman yields back. Who seeks recognition on Ms. Garcia's amendment? Mr. Muser, you're recognized to strike the last word.
Thank you, Mr. Chairman. I oppose this amendment and do strongly support the underlying bill, H.R. 7128, TRIA Authorization Act, introduced by Representative Mike Flood. The bill is very important, and it makes sure our terrorism risk insurance framework continues to work the way Congress intended, protecting policyholders, supporting economic activity, and providing stability to insurance markets without distorting them. It is important that we do not distort the bill because of how important it is. The Terrorism Risk Insurance Act, TRIA, exists for a very simple reason. Terrorism risk is fundamentally different from other insurable risks. It is unpredictable, highly correlated, and potentially catastrophic. Private market alone cannot reliably price or absorb it, and history has shown that when coverage disappears, construction stops, jobs are delayed, and economic activity slows. TRIA was created after 9/11 to ensure lapses in insurance because of terrorism won't occur. This reauthorization makes meaningful improvements for policyholders while responsibly updating the program without disrupting the insurance market. By extending the program for 7 years, Congress gives insurers, lenders, and businesses the predictability they need to plan, invest, and build. That certainty matters long before any attack ever occurs. Additionally, the bill improves protections for policyholders by increasing transparency and reducing uncertainty after an event. The insurance industry relies on predictable terrorism insurance to protect their customers. When the unthinkable happens, this legislation allows our insurance companies to continue to provide that certainty. For these very common sense reasons, I urge my colleagues to support the bill, and I yield back.
Gentleman from Pennsylvania yields back, who seeks recognition. Mr. Lynch of Massachusetts.
Thank you, Mr. Chairman.
Recognize the strike the last word.
Thank you. Look, when government agents act outside the law, there is a strong argument for accountability. Compensation for damages could be viewed as a necessary step in holding the government responsible for inappropriate or illegal actions by its employees. Also, protecting private property rights is a fundamental right within our legal system, and one that has often been raised by my colleagues on the other side of the aisle. Allowing the government to escape accountability for wrongful actions undermines the rule of law and will eventually erode public trust in government institutions. There are legal frameworks in place that govern how property damage caused by the government is addressed, and compensation could depend on whether the actions were deemed lawful or if they've violated constitutional rights, as Ms. Garcia's amendment anticipates. From a policy perspective, compensating victims of illegal actions by government agencies could serve the public interest by restoring trust and ensuring justice for those wronged and discouraging future misconduct. Providing compensation could also encourage the government to get their act together and cause those agencies to adopt stricter protocols and oversight to avoid situations that lead to illegal activities and damages in the first place. In this case, we have a situation where the Secretary, Department of Homeland Security, Ms. Noem, has flatly refused to comply with the law. Ms. Noem has delivered false narratives, lied to the American people. She claimed that that Ms. Good in Minneapolis had run over the agent and he had responded to that fact, and that he was in the hospital. That lie was repeated by the president and vice president. Right now in Minneapolis, we have thousands of ICE agents going through the city, not with warrants, but just at random, grabbing people who may be people of color and saying, "Where are your papers? Where are your papers?" Where have we heard that before? Where in history have we heard, "Where are your papers?" That's what's going on right now in Minneapolis. And ICE, under the direction of Kristi Noem, has completely gone off the rails, and it is violating the basic rights of American citizens. They started out by saying they were going to get the worst of the worst. Those people who had been, had warrants and outstanding charges against them, gang members. Now they're just going random, stopping people on the street. "Where are your papers?" This has gone very, very badly and very wrong. Later on today, we're going to have the Department of Homeland Security bill up before Congress. That's a bill that normally has bipartisan support. But because ICE has gone completely rogue and is daily violating the laws of American citizens in this country, I'm going to vote no. I'm going to vote to cut that funding. I will not support an agency that is acting contrary to law on a daily basis and that has violated the constitutional rights of my fellow citizens, my fellow Americans. That's not happening. And I'm hoping that my Republican colleagues will stand with us. It's the only power we have in Congress is the power of the purse. This is our opportunity to say no to funding for the Department of Homeland Security until they comply with the law. Pretty basic. It's the one chance we have. It will wake them up if they don't have funding. So while it is I will agree, it is an extreme step, but we're living in extreme times. And American citizens are being put at extreme risk, and their rights are being violated. And we need to step up. So I ask members to support Ms. Garcia's amendment, and also that they vote against DHS funding later on today. I yield back, Mr. Chairman. Thank you.
Gentleman's time has expired. Mr. Davidson from Ohio, the chair of our National Security Subcommittee.
Thank you, Mr. Chairman. I do move to strike the last word.
You're recognized for 5 minutes.
Jesus said we can be angry and not sin, so I'm going to give it my best shot right here. The amount of red herrings and false stuff that's being spewed for the premises behind this amendment is offensive. To tell the American people and us in this room that ICE is a terrorist organization and therefore TRIA should cover the losses? Are you freaking kidding me? If you look at the proximate cause, you talk about the laws not being followed. The previous administration fueled an invasion of our country by failing to secure our borders, by ignoring our laws, and now we have sanctuary cities who invited these people in, who served as accomplices to the crime, continuing to obstruct justice. The reality is Alejandro Mayorkas and all of his accomplices should be on trial today. And if we don't put them in jail for a really long time after due process and a trial, some future administration is going to think they can fuel an invasion, only we need to do more of it faster. Now you get mad because ICE is enforcing the laws that the previous administration failed to enforce and want the government to cover for your game. The invasion you're fueling of our country, it's treason. It's treason. And it's a complete waste of this committee's time to even bring it up, to try to grandstand over your fake agenda to destroy our country
Well, the gentleman
related to
yield.
terrorism. I will not yield to you on this subject, period.
Well, thank
It's
you for being
offensive
such-
if you
thank you
can't
for being
tell.
A gentleman. Thank you for
Silence,
being a
the
gentleman.
time is mine.
Thank you for
Time
being a
belongs to
gentleman.
the
I don't care whose time it is.
The tenor order.
Remember January 6th.
Ladies and gentlemen, the time belongs to the gentleman from Ohio.
TRIA is a program that I support. Every contract I've entered into has a force majeure clause. And there are acts that are unanticipated, that are hard to insure the risk for. I don't think the program's perfectly designed. I wish I was here for the debate. Mr. Rose presented his amendment. I don't think I agree with the points. But I do think, hey, we probably don't have a perfect terrorism risk insurance program. But I applaud Mr. Flood, Mr. Cleaver for working together on a reauthorization. That's what we should be focused on today. The idea that we would defund ICE is probably about as dumb as defunding the police. But Minneapolis wanted to do both. And so, yes, I hope those people are held accountable. But the Financial Services Committee is not the committee of jurisdiction for that. So if you want to do that, go to one of the other committees, do your grandstanding somewhere else, and quit wasting our time in this committee. I yield back.
The gentleman yields back. If there's no further debate, the question now occurs on the amendment. All those in favor of Ms. Garcia's amendment shall signify by saying aye.
Aye.
All those opposed signify by saying nay. Nay. In the opinion chair, the nays have it.
Mr.
The nays
Chairman, I
have
ask
it,
for
and the
recorded
amendment
vote.
Is not adopted.
Mr. Chairman, I ask for a recorded vote.
Requested.
The gentlewoman from Texas requested the yeas and nays. A recorded vote is requested. Those in favor of a recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is ordered pursuant to subsection C5 of Rule 3 of the committee rules. Further proceedings on the amendment are postponed. We'll now move to the next amendment
now.
on
I have an
Mr.
amendment.
Flood's.
I have an amendment.
Yes.
I have an amendment.
Ms. Waters has an amendment at the desk. We'll pause for it to be distributed.
Mr. Chairman,
Mr. Lucas.
raise a point of order.
Gentleman from Oklahoma reserves a point of order on the Waters amendment.
We worked so hard to keep this bipartisan. We pulled a bunny out of a hat.
The clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 7128, offered by Ms. Waters of California, designated as TRIA Amend 2.
Without objection, the amendment is considered read. The gentlewoman from California, Ms. Waters, is recognized to describe her amendment. You're recognized for 5 minutes.
I move to strike the last word.
Gentlewoman's recognized.
My amendment is simple. It would require the TRIA program to cover any property losses incurred by a U.S. citizen as a result of the president invoking the Insurrection Act. He promised he was going to do that, by the way. Our cities, our U.S. citizens are under attack from this blustering president and his relentless obsession with hunting, harassing, and bullying Americans, including those simply exercising their First Amendment rights. As families and workers are going about their day with their kids at school drop-off, at their places of work, minding their business, they now need to worry about Trump sending in troops to back up his masked federal agents who have already hurt, detained, assaulted, and killed U.S. citizens going door to door, block to block, businesses to business. When is this going to end? And who is going to pay for the damages? Imagine a small business whose delivery truck's windows are bashed in because a Trump agent thinks their accent is different or they look like an immigrant, which to Trump means brown and black. Congress should immediately halt this activity, our committee should see how to pay for any damages. My amendment is simple. It says the president needs to be responsible and pay for his actions if U.S. citizens get their doors bashed. It says the federal government will be accountable for smashing in windows, causing cars to crash, and hurting small retailers that are already scraping to keep their doors in the midst of this mess. Sending in troops to our American cities is not the answer. We're not the enemy, and it is certainly not the responsibility of U.S. citizens to clean up this mess. And this amendment would ensure that Trump, not Americans, pay for those property losses. Ladies and gentlemen, we just heard from one of our members on the opposite side of the aisle saying protesters should be jailed, they should be imprisoned, and talking about they are literally the blame for the damages that are being caused by ICE. ICE has gone into these cities. There were no protesters, but they created the confrontation. Mr. Davison had the audacity to talk about them being arrested and jailed, and he and others on the opposite side of the aisle won't even admit that what happened January 6th in this country, where we were under attack, where our government was under attack by domestic terrorists, that are aligned with the President of the United States, the Proud Boys, the Oath Keepers, the KKK, descended on us. They broke into our windows. They were in our offices. They had their feet up on Nancy Pelosi's desk, and they caused some of our Capitol Police to commit suicide, and they are responsible for their deaths as they attack them with the American flag. How dare him or anybody on the opposite side to talk about that was not an insurrection, that was not an invasion, that they didn't do harm. You know what they did. You know what ICE is doing. You know Miss Good was killed. You know that he shot her driving away after having been nice to him. So don't bring that here today, and don't ask me to be quiet. Don't ask me to be nice. Don't ask me to do a darn thing. But if you don't like the fact that she's got an amendment, keep your mouth shut. But don't start lying, and don't start talking about these protesters need to be criminalized and put in jail. If I have any time, I'm not going to yield it back. Thank you for talking about defunding, because that's what we need to do. Homeland Security needs to be defunded, and I'm with you. I will never vote for it as long as this is going on. Now you can have the time back. I yield.
Gentlewoman yields back who seeks recognition. The gentleman from Ohio.
I move to strike the last word.
Gentleman's recognized for 5 minutes.
I don't ask the gentlelady to be silent. I do ask her to be truthful. I didn't call for protesters to be jailed. I called for Alejandro Mayorkas and his accomplices operating sanctuary cities to be prosecuted with due process, convicted, and jailed with very long sentences. So that is what I would like to see happen. I think justice demands it, frankly. But the idea to say that if the president invokes the Insurrection Act, that we should treat that as an act of terror is tantamount to South Carolina saying that the Union should pay for reconstruction of Fort Sumter in South Carolina. No, your state isn't that sovereign. The states are the coalition that built the United States of America. The Ninth Amendment says clearly that all of the rights that people have aren't protected by the United States Constitution. And then in the 10th Amendment, it says those powers not delegated to the federal government are reserved for the states. But the one thing that's very clear that out of the Constitution is the United States of America comes up with one standard set of naturalization laws, one standard definition of what is and is not a citizen. And we have states and cities in open rebellion to the sovereignty of the United States of America. Just as we had some states in open rebellion to the Union in the Civil War, today we have cities and states in open rebellion. And unfortunately, they still get funding. They still roam free. They still say inflammatory things, as the mayor of Minneapolis said to ICE, "Get the F out of Minneapolis." No, sir, we will not. We don't need to get to many of the cities and states around the country because they cooperate. When you've got a warrant for someone's arrest, they support federal law enforcement. But the previous administration and the previous one, Obama and Biden, they sued states like Arizona to prevent them from even helping enforce immigration law because they wanted sanctuaries. They wanted open rebellion to the sovereignty of the United States. Our Constitution does protect lots of sovereignty for states, but it doesn't let you pick who's a citizen. And the federal government is going to enforce those laws. Now, I hope ICE is more effective at it. I hope they're more professional and beyond reproach in every way they do it. I hope protesters can't even get access because they blockade the road effectively so that everyone's safer. I support the right to protest, but there's time, manner, and place restrictions that are reasonable on that. And we're going to talk about that soon with respect to churches. Imagine thinking you're the good guys when you crash a worship service on Sunday. And you look at where this is headed, it's headed the same way as the Civil War was. If you've got cities and states in open rebellion to the sovereignty of this country, just as George Washington looked at, he said, are we going to put this rebellion down, or are we going to let it spread? I think we let it spread far too far already. And that's why I think Alejandro Mayorkas ought to be on trial and every other accomplice operating a sanctuary city or state, and frankly, the people facilitating and including the non-government organizations that were fueled with cash from government money. There's a lot of accomplices here, and I really hope that Pam Bondi's inaction on lots of prosecutions doesn't represent inaction, but diligence so that the trials are very successful. I think justice demands it. But the idea that the terrorism risk insurance program that we operate for terrorists against the United States would apply to the actions of the United States to defend the sovereignty, we already have a law, the Insurrection Act, and I hope it's never needed in our country. But if it is, I hope it's wielded to restore the sovereignty of the United States, and of course, the people that caused it will be responsible for the damage. I yield back.
Gentleman yields back. Who seeks recognition on Ms. Waters? I'm sorry, I beg your
strike
pardon.
that.
The gentleman
Move to
from
strike
Oklahoma.
Mr. Chairman, I'd like to
Ms.
withdraw my
Garcia.
point of order.
Gentleman from Oklahoma withdraws his point of order.
Move to strike the last word.
The gentlewoman from Texas is recognized on the Waters Amendment.
Thank you, Mr. Chairman. I want to just say a few comments about supporting the Waters Amendment. I think it's clear, again, I'm really focused on the comment that you made. Is it really fair to businesses in the marathon route if they suffer damages to their property because of the marathon bombing? It's the same thing. Is it fair for businesses in the occupation of a city because of, in the insurrection act, or in my case, the ICE activity, the raids and the occupation that they're doing in cities across America? Well, it's not fair. So who's going to pay for it? People's homes are being damaged, cars are being damaged, businesses are being damaged, schools. I mean, you name it, they are going everywhere. My colleague across the aisle talked about houses of worship. I mean, they are going to schools. They're going to funerals, to hospitals, to courthouses. They're just stopping people anywhere they want. And in many cases, there is damages to property. So who's going to pay for that? The average citizen may or may not have insurance, but they're going to be stuck with a bill of repair. And for many businesses, they don't have disruption of business insurance. They don't have insurance for the lost revenues. They don't have insurance for eventually having to shut down. Well, I do think it's a government response, and I wish that the gentleman would take time to read the amendment, because my amendment, and I don't even see it in Representative Waters' amendment, doesn't say anything about designating ICE as a terrorist group. It doesn't. It just says that we now will add this to the existing bill to cover for these property damages. And I don't know that the act itself requires a designation of some group or another group a terrorist. So, he keeps talking about falsehoods on this side. I think he should check his own words first before he starts throws stones our way, because it certainly sounds to me that he has made more than one misstatement and more than one, alternative facts on this issue. Again, I support this amendment. Who should get stuck with the bill if you are in harm's way or in the line of fire or in the line of the raid when it comes to ICE or when it comes to Insurrection Act imposition by the felon in the White House? Well, I think we should, because we're the ones who caused it, and that's the U.S. government. With that, I yield back.
Gentleman yields back. Members are reminded that pursuant to House Rule 17, they should avoid engaging in personalities when they speak about the president. It can always be about policy. It cannot be personal. Gentleman yields back. Who seeks?
Will the gentleman yield?
No, I won't. I'm asking who seeks additional
Mr. Chairman.
time on the Waters Amendment.
Mr. Chairman,
Mr. Lynch.
Mr. Lynch.
move to strike the last word.
Gentlewoman's recognized for 5 minutes.
Thank you, sir. Mr. Chairman, I take the gentleman from Ohio's comments at face value, that we do all wish that every ICE agent would act within the law. We wish that we wish that the legal process in investigating the killing of Ms. Wood and Ms. Good, excuse me, in in Minnesota would have been conducted with the usual legal process, the investigation and prosecution, if necessary, of those individuals involved. But that's not happening. That's not happening. Right now, the U.S. Attorney General has banned the normal legal investigative process by state officials and city officials in that killing. They banned them from participating in the investigation and have taken it over completely on the federal side. So now we have the federal government investigating federal personnel, and I think we all know how that's going to come out. The other piece of this is that Department of Homeland Security funding used to be bipartisan. I have supported that for the past 25 years, proud to do so, and I cannot think of an instance where our debate over Department of Homeland Security, right from the beginning, when it was created, I was elected on September 11th. I came here shortly after when we created the Department of Homeland Security. Tom Ridge from Pennsylvania was the new secretary. And from that day forward to this day, we've never had, in my memory, any serious disagreement about funding for Department of Homeland Security. And we have valued that. But right now, we have agents that are clearly not acting within the law. And the management of ICE, especially in the person of Secretary Noem, has flatly refused to ask those agents to comport with the law. She has instructed them, as I described before, to go out in the general public and just approach American citizens and ask them to produce their papers. That's wrong. That's Gestapo-like, right? That's the last time in history we heard that phrase, show me your papers. Those are American citizens that are being subject to that. I'm part of a litigation task force. It's gotten so bad, we had to create a litigation task force to bring suit against the president and various secretaries in his cabinet for violation of federal law and of constitutional rights. And at this point, since January, when President Trump took office, to now, we have filed over 600 cases of instances where the federal officials and federal personnel and the president and the secretaries in his cabinet have violated the law. We've won a bunch. They just keep appealing them. But that's where we're at today. This is different. Yeah, I concede the fact that voting against ICE funding, voting against Department of Homeland Security funding is a drastic step, and I don't want to take it. But as a legislator, the power of the purse is one of the few powers we actually have to hold the executive accountable. And I'm saying, yeah, it's crazy, but in this crazy world, it is necessary to protect my fellow American citizens from the illegal activity being perpetrated against them by this administration. So yeah, I'm gonna, I won't say happily, but energetically and enthusiastically support zeroing out funding for the Department of Homeland Security and ICE when that comes up later on the floor. And I encourage all my colleagues, and hopefully we'll get some Republican votes on that as well. But I ask everybody to support that measure and hold them responsible, get them back in line, get them back under the rule of law. Mr. Chairman, I yield back.
Gentleman's time has expired. Is there any further debate on the Waters Amendment? If there's no further debate, question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye.
Aye.
All those opposed signify by saying nay. Nay.
Recorded vote
In
is
the opinion of the chair, the nays have it. The nays have it, and the amendment is not adopted.
Recorded vote.
The ranking member requests a recorded vote. All those in favor of a recorded vote, raise your hands. Sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendment are postponed. We'll now move to the next amendment on Mr. Flood's amendment in the nature of a substitute. Seeing no further amendments, without objection, the previous question on the substitute is ordered. Recorded votes on the pending amendments have been postponed. Once those votes are taken, the committee will immediately vote on adoption amendment in the nature of a substitute, and then we'll consider the question to report the measure to the House. We'll now move to the next bill. Pursuant to notice, I call up HRes 1007, a resolution expressing the sense of the House of Representatives with respect to the use of artificial intelligence in the financial services and housing industries, which was introduced by Representative Brian Stile. The clerk will report the resolution, which was distributed in advance.
House Resolution 1007, expressing the sense of the House of Representatives with respect to the use of artificial intelligence in the financial services and housing industries.
Without objection, the resolution is considered read, open to amendment at any point. Representative Stile has an amendment in the nature of a substitute, copies of which were distributed in advance. The clerk will report the amendment.
An amendment in the nature of a substitute to HRS 1007, offered by Mr. Stile of Wisconsin, designated as Stile WI 037.
Without objection, the amendment is considered read, will serve as base text for the purposes of amendment. The gentleman from Wisconsin, the chair of our Financial Technology, Digital Assets, and Artificial Intelligence Subcommittee, Mr. Stile, you're recognized for 5 minutes.
Thank you very much, Mr. Chairman. I also want to thank the ranking member, Mr. Lynch, Mr. Downing, Mr. Liccardo, for their work on this important resolution. The AI revolution is here, and it's already reshaping the financial services industry. For 2 decades, the Digital Assets, Financial Technology, and Artificial Intelligence Subcommittee has focused on advancing the development and deployment of AI. Through hearings and extensive engagement with experts, we've learned directly from those innovating in the space about the promise and potential risks of new AI tools and applications. That's why it's important that our nonpartisan resolution affirms our commitment to the following. 1, unlocking new use cases under risk-based guardrails. 2, expanding agencies' knowledge of governance and regulatory best practices. And 3, understanding financial stability risks. And 4, overcoming ineffective regulation. As generative and agentic AI continue to develop, these technologies present significant opportunities across the financial services sector. Market participants are deploying AI to improve customer experiences, enhance compliance, expand access to credit, enhance research capabilities, streamline mortgage servicing, increase repayment rates, and fight fraud. We've heard clearly from market participants about both the benefits of these technologies and the regulatory frameworks that they apply to in these use cases. We've also heard from the experts about where AI can pose potential risks, revealing uncertainties as well as inefficiencies in our regulatory framework. This resolution highlights several areas of consensus across the aisle. It is about unleashing innovation, enforcing existing laws. It's about protecting consumers. It's about assessing the impact of AI in markets and workers, avoiding overly burdensome rules, strengthening cybersecurity, and ensuring America maintains global leadership in AI. Given the critical nature of the financial services and housing sectors and their long history of being intertwined with AI innovation, our resolution calls for this committee to lead on AI policy for these vital industries while ensuring consumers are protected. We must leverage our existing technology-neutral financial regulations, including anti-discrimination and consumer protection laws, and assess gaps as market participants adopt AI. At the same time, we must ensure our financial regulators have the tools, expertise, and understanding necessary as new AI-powered products and services come to market. We all agree. This committee should promote pro-consumer, pro-investor, and pro-innovation culture for AI in financial services and housing. This nonpartisan resolution affirms these priorities. As the United States competes in the global AI race, this committee will help us win. Again, I want to thank the ranking member, Mr. Lynch, Mr. Downing, Mr. Liccardo, for their work and their support on this, and I urge my colleagues to support this resolution. Mr. Chairman, I yield back.
Gentleman yields back. Is there further debate on ENS? The gentleman from Massachusetts, the ranking member on our Financial Technology, Digital Assets, and Artificial Intelligence Subcommittee.
Thank you, Mr. Chairman. I'd like to strike the last word.
Gentleman's recognized for 5 minutes.
Thank you, Mr. Chairman. I'd like to thank Chairman Stile for his great work on this, and Ranking Member Waters as well, and you, Mr. Chairman, in support of this bipartisan resolution. Our committee continues to serve as a leading role in conducting oversight of the development of artificial intelligence in the financial services sector, from banking and housing to credit lending and anti-money laundering. As evidenced by the final report issued by our bipartisan working group on AI, a safe and responsible AI innovation protocol will require a sustained and collective effort on the part of regulators, Congress, and AI stakeholders to mitigate the potential for bias, discrimination, and other risks associated with AI systems whose results are not readily explainable to the end user. Toward this goal, we must ensure that regulators are equipped with the resources necessary to enforce existing consumer protection and civil rights laws, while also addressing statutory and regulatory gaps in the AI space. House Resolution 1007 reflects our previous bipartisan work on promoting safe and responsible innovation that also maximizes consumer protections. And as ranking member of the Subcommittee on Digital Assets, FinTech, and Artificial Intelligence, I urge my colleagues on both sides of the aisle to please support this resolution, and I yield back the balance of my time.
Mr. Lynch yields back. Who seeks recognition on our artificial intelligence resolution? I now recognize myself for 5 minutes, not seeing any other speakers. The next generation of technological development is here, generative artificial intelligence. Through the committee hearings and yesterday's AI Expo, we've seen firsthand how artificial intelligence is already transforming our economy and financial services. We've examined its applications in the financial services and housing space, as well as how regulators themselves are using AI and supervising the use of AI. We've also heard clearly about the regulatory challenges and roadblocks to AI development or deployment. Today, we consider a resolution that underscores the importance of getting AI policy right in financial services and housing. For decades, these sectors have leveraged AI to improve fraud detection, risk management, investment decisions, operational efficiency. As generative and agentic AI continue to advance, it's vital that this committee plays a leading role in shaping how these technologies are used and overseen in the context of federal law. By adopting a try-first approach to AI regulation, we can assure that U.S. financial services industry remains a global leader in AI adoption. I want to say thank you to the chair of our Financial Technology Subcommittee and the ranking member for collaborating on this, because setting this high-level direction, I think, helps us find consensus as we work through policy areas. We've done this before, for example, one that I've cited for the last 4 years. In the 1990s, Congress was led in a resolution about the internet by then Congressman Chris Cox. Confronted with the rapid growth of the internet, members didn't know what direction it would take. It was a mystery. There was pornography on it. There was concern about our kids, concern about how to regulate it. But Chris Cox led a bipartisan effort for the Congress to say, we will tax and regulate the use of the internet, but we won't do it to the internet itself. And that allowed all the facilitation of what we've seen in the last 30 years of the use of the decentralized internet, allowing Congress then to focus on how to deal with regulatory frameworks of people who use the internet in their business. We can adopt our existing approach to meet the next generation of technological advancement and seize opportunities without letting fear stand in the way of progress. I want to thank again Congressman Stile, Congressman Lynch for collaborating. I urge my colleagues to support this bipartisan resolution, and I yield back. Does anyone else seek recognition? The ranking member.
I move to strike the last
The
word.
gentlewoman is recognized for 5 minutes.
Thank you. In the 118th Congress, former Chair Patrick McHenry and I established the bipartisan AI working group, which examined the use of AI in the housing and financial services industry. This working group held roundtable discussions with companies and government agencies, building off the important work of the AI task force, which I established under my leadership in the 116th and the 117th Congress. Today's resolution captures key lessons from last Congress's bipartisan working group, as well as critical issues the committee must focus on now. As consumers grow more exposed to AI technology in every part of their lives, this resolution contains new language directing the committee to evaluate state laws, emphasizing the importance of ensuring states' regulations are considered on the committee agenda. This resolution also ensures Congress doesn't bail out AI companies in the event of financial collapse. I want to thank Mr. Stile for making important changes to his introduced resolution, including striking references to creating rules-free zones for AI to operate and for recognizing the importance states play in setting safeguards for AI. However, this bipartisan resolution is only the first step. Much more action is needed. Since last Congress, newer developments like agentic AI have introduced unprecedented automation opportunities, but at the same time have raised serious concerns about the future of work and potential large-scale job losses. Generative AI, which has captured the public's fascination, has, in the most devastating cases, promoted self-harm like suicide, carried out sexually explicit conversations, and even provided dangerous misinformation and disinformation to minors. With only one full committee AI hearing this Congress, Republicans have not sufficiently examined this space. Unfortunately, we also have seen the Trump administration pull back AI safeguards and undermine states' oversight by weaponizing lawsuits and federal funding against states that are simply trying to protect their constituents. So I don't know what this Trump administration is doing. They have tried to interfere and capture everything and to monetize everything so that they would have an opportunity, he and his family, to get more riches, to get more profits. And so I'm sure he's got a scheme. The administration, the Trump administration, has a scheme by which they can get involved and control AI and make money.
Would the gentlewoman yield?
I will yield.
I thank the gentlewoman. I think you raised a really important point that we witnessed in the budget reconciliation debate last summer about federal moratorium on state law actions. This is something I think that is a really important issue for the Congress to consider. I don't think there's anything more interstate commerce than machine learning and artificial intelligence, so we do have to find that balance. So I certainly hope the gentlewoman will work with me to encourage the administration, the Energy and Commerce Committee, and others engaged in this to find a path where the states and the federal government can find lanes to work together and not, be on 180 degrees opposed. And I thank the gentlewoman for raising that concept.
Well, I thank you
remarks. I
very
yield back.
much. I thank you very much, Mr. Chairman. And normally, I question the commitment to states' rights on everything, but I'm with this committee now.
We'll talk about privacy in California
that's right.
too. No, we won't. Okay. I thank the gentlewoman. It's your time. Are you yielding back?
I'm yielding back.
She's yielding back. Does anyone else offer an amendment at this time to the ANS? If there, seeing there's no further discussion or amendments on the Style Lynch resolution, the question now occurs on the adoption of the amendment in the nature of a substitute. All those in favor signify by saying aye. Aye. Those opposed signify by saying nay. Opinion of the chair, the ayes have it. The amendment is adopted. Question now occurs on ordering the resolution as amended to be reported to the House with a favorable recommendation. Those in favor signify by saying aye. Aye. All those opposed signify by saying nay. In the opinion of the chair, the ayes have it.
Mr.
For what
Speaker, I
purpose does the
request
gentleman from Wisconsin seek?
Recorded vote.
Gentleman's requested a recorded vote. All those in favor of a recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. We'll now move to the next bill. We're going to call up H.R. 7056, the Community Bank Regulatory Tailoring Act, which was introduced by the chair of our Financial Institutions Subcommittee, Andy Barr of Kentucky. The clerk will report the bill, which was distributed in advance.
H.R. 7056, to index statutory thresholds and for other purposes.
Without objection, the bill is considered read and open to amendment at any time. Representative Barr has an amendment in the nature of a substitute, copies of which have been distributed in advance. Clerk will report that amendment.
An amendment in the nature of a substitute to H.R. 7056, offered by Mr. Barr of Kentucky, designated as Bar 126.
Without objection, the amendment is considered read, will serve as base text for the purposes of amendment. The gentleman from Kentucky, the chair of our Financial Institutions Subcommittee, Mr. Barr, you're recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you for prioritizing this important piece of legislation. I'm proud to sponsor H.R. 7056, the Community Bank Regulatory Tailoring Act of 2026. This straightforward bill is another in a long line of bipartisan legislation in this Congress that modernizes the outdated statutory thresholds, imposing needless and disproportionate burdens on our community banks and credit unions. Let me be clear, this bill is not about limiting regulation or weakening financial oversight. Dodd-Frank created one of the most sweeping regulatory overhauls to our financial system in the nation's history, but it was blind to the impact of economic growth on our banking system. Dodd-Frank failed to account for a booming economy like we have now, thanks to the great work by President Trump and this Congress. Static, dollar-denominated capital thresholds properly direct the most rigorous supervision towards the largest and most complex institutions. However, these thresholds have begun to punish and improperly regulate community banks and credit unions that have not meaningfully changed in risk or complexity. We have repeatedly heard from these institutions that, quote, bracket creep, unquote, is a real and growing problem. Under this current framework, institutions are improperly being pushed into a higher regulatory classification, not due to an increase in risk or complexity, but simply due to organic growth in our economy. While the nominal value of their assets has increased, their size and risk profile has remained the same relative to the broader economy. As a result of this higher classification, our low-risk community banks and credit unions face burdensome and excessive compliance costs that drain time and resources and limit their ability to compete and serve their communities. This misalignment doesn't just harm the institutions themselves. It also leads to an inefficient use of supervisory resources. Regulators are increasingly focused on institutions that have only grown on paper rather than in practice, diverting attention away from our more systemically impactful institutions. Our community banks and credit unions are being punished with unnecessary regulation and compliance costs due to factors outside of their control, which is why it's so important to advance my bill that indexes the new thresholds to nominal GDP for these community banks and credit unions, while also codifying automatic adjustments on a permanent basis to prevent these sorts of issues in the future. Thresholds raised under my legislation include the qualified mortgage rule, Volcker rule, and additional thresholds related to annual independent audit requirements for small banks. We have seen time and time again how one-size-fits-all approach has proven unsuccessful and continues to threaten to leave the U.S. with a barbell banking system, and many communities' needs left unserved by banking organizations. By updating regulatory thresholds on an ongoing basis, we won't punish our small community financial institutions for merely growing along with the rest of our economy. It is imperative that Congress right-size the regulatory framework for our community banks and credit unions to allow them to grow organically. We all want a regulatory system that is transparent, fair, and safe. That means ensuring large, complex institutions are held to appropriately high standards, but also opening the door for small, low-risk institutions to thrive without the burden of unnecessary compliance regimes that were never designed for them. This committee should seek to modernize the regulatory system to serve local communities, promote innovation, and help local economies grow. It's time to put an end to the one-size-fits-all approach and ensure that our regulatory framework reflects economic reality. Let's create a system that rewards success, that supports local communities, and ensures financial stability. Let's work on this today to make sure that we can advance these community banks in a way that earns bipartisan support. I know many of my colleagues on the other side of the aisle talk about their support for community banks. There's no reason why this common sense piece of legislation should not earn bipartisan support, and I urge all my colleagues to support H.R. 756, and I yield back.
Gentleman yields back. Who seeks recognition on Mr. Barr's bill? Ranking member.
Move to strike the last word.
The gentlewoman is recognized for 5 minutes.
Thank you very much. We all support community banks and credit unions, but Representative Barr's bill would increase 37 different regulatory thresholds across a wide range of important laws, and it indexes these thresholds to continue to grow rapidly based on nominal GDP. Now, I know Chairman Hill has stressed the importance of taking a data-driven approach to deposit insurance reform. Maybe Representative Barr didn't get the memo, but I have not seen any data or studies or evidence to justify each of the changes made by this bill. Instead, consumer groups have raised strong warnings, including Americans for Financial Reform, which wrote, and I quote, "Under the pretext of relief for community banks, this bill would rewrite a wide swath of federal banking, consumer financial protection, and fair lending laws by simultaneously raising 36 statutory thresholds and then locking in statutory future increases every 5 years." The National Community Reinvestment Coalition wrote, and I quote, "The measure is, in essence, a broad deregulatory effort that would disproportionately affect low and moderate income communities, communities of color, and rural communities. Indeed, the rollbacks are significant at a time when Trump has shut down the Consumer Financial Protection Bureau. This bill adds insult to injury by rolling back several key consumer protection and related laws like the Home Mortgage Disclosure Act and the Community Reinvestment Act. Those laws have ensured we have a transparent and competitive financial marketplace where underserved home buyers and small businesses are not redlined and have equal access to credit. But guess what? That's not all. Instead of focusing on community banks, Republicans snuck in relief once again for some of our largest banks as well. Roughly 87% of all banks have less than $1 billion in assets, and yet this bill helps out banks more than 100 times larger than those banks. And so, specifically, the bill increases two $50 billion thresholds. One goes up to $105 billion. Another goes up to $175 billion. And those thresholds will keep growing rapidly, given the bill's indexing provision. I look forward to the sponsor trying to explain how helping the big banks with more than $100 billion somehow helps the community banks. Additionally, Representative Barr seems to have forgotten a very important threshold, one that is important to community banks, credit unions, small businesses, and Americans who put their money in banks. And so I'm talking about an increase in the deposit insurance limit so that bank customers, and not just banks, can benefit from the bill too. Now, I'm not sure why, since his president's economic team, from Vice President Vance to Treasury Secretary Bessent, support raising this threshold. That's an issue that has broad bipartisan support in Congress too. So I hope that can be rectified soon. Finally, I would note that Representative Barr's bill contradicts an indexing approach that Trump's own regulators decided to use. The FDIC recently considered a similar nominal GDP indexing approach for several of the thresholds covered by this bill, but they rejected it, citing a number of flaws. Instead, they issued a final rule updating thresholds based on inflation instead. So with all due respect to my friend from Kentucky, we should heed the FDIC's warnings about this dangerous approach and vote no on H.R. 7056, and I yield back.
The gentlewoman yields back. Who seeks recognition on Mr. Barr's amendment of nature substitute? Mr. Lynch,
Move to strike the last word.
you're recognized for 5 minutes.
Thank you, Mr. Chairman. This is a pretty broad bill. It has major impacts. As the ranking member noted, this bill modifies 37 regulatory thresholds for banks and credit unions regarding a huge range of topics, including capital, mortgage disclosures, ability to repay consumer protections, community investment exams, the Volcker Rule, which prohibits proprietary trading, executive compensation, gap accounting, audits, material loss reviews, orderly liquidation authority, Federal Reserve dividends. That's just the ones I can pick out here. And so it just automatically, every 5 years, it increases the thresholds based on GDP, gross domestic product. There's no data to support any of this that we have seen. It's a new bill. And in the past, capital requirements, just for one example, capital requirements were based on risk. Risk, like what's the bank doing, and would their activity be riskier and therefore warrant greater capital levels, capital reserve levels. So, this does away with that, and we're just going to look at GDP. And I don't see, the sense in that. The bill provides no flexibility if we find danger because of the activity of some banks or credit unions. It provides no ability to intervene. There's no off-ramp here. These thresholds continue to increase every 5 years, again, based on nominal GDP. So the other point I want to just contest here is the gentleman's statement that none of this has had any increase in complexity. I would just point to a couple of bills we recently passed on crypto. So crypto is going to be part of the banking industry. Consumer behavior is still unknown in that. There's a tremendous amount of complexity now being introduced because of stable coins, because of crypto, and how those are going to affect all of these institutions. There's tremendous complexity that we're embracing here that we don't have answers for right now. So that idea that this is going to just stay the same and it's not changing, and so we can raise these thresholds and ignore risk, I think is foolhardy. I think that we're in an age of tremendous complexity in financial services, and this bill actually is risk agnostic. In other words, we don't care how risky people operate, we're going to raise these thresholds and let them take on more risk regardless of what they do. And I just think that that is the wrong direction to take. I will agree with the gentleman that we need to find ways to address the needs and operations and the world of community banks in a better way, and it is wrong to just sort of graft on to their regulations the things that we think are necessary for the largest banks. And I'm worried about our community banks on a regular basis. I think they do much for our local communities. They're they are the lender that takes the time and attention to small businesses and makes those loans, and same with a lot of our credit unions. And so we need to really take action to protect them. But this does not. This creates greater risk. And while the good actors will probably keep doing what they've been doing, it does open tremendous opportunity for risk to be taken on by these banks, either intentionally or just because these thresholds increase every 5 years, regardless of what is happening in the world around them. So I oppose this. I would like to find a more incremental way to reduce those regulations against our community banks, and I welcome the opportunity to do that. Mr. Chairman, I yield back.
Gentleman yields back, seeks recognition on Mr. Barr's amendment nature substitute. Seeing no one seek recognition, I'll recognize myself for 5 minutes. Let me say that I rise in support of Mr. Barr's bill, H.R. 7056. I really have listened intently to the comments made by the ranking member and my good friend from Massachusetts, and some good points were made there. I'd like to start by addressing those. First, an interesting point is, that we're touching 37 different items, and that's something Congress has created over all the years of attempting to tailor. So we've created this Byzantine set of definitions that are not consistent, and yet I think a majority of the committee, particularly in this Congress, recognize that tailoring based on size, complexity, risk is appropriate, generally speaking. And so I would hope, Mr. Barr, that we could actually work with the Vice Chairman of the Federal Reserve, Mickey Bowman, who's the senior supervisory official, to also make a recommendation to this Congress on skinnying down that number of places where we have tailoring in the statutes writ at large. So I thought that was a constructive comment. Mr. Lynch also referenced, in some way, does this weaken risk? And I would argue no, because the underlying nature of bank supervision, regardless of whether one is $500 million or $200 billion, is any management team, any board of directors that is conducting any activity that's unsafe or unsound preempts any of this discussion we're having today. Meaning the supervisory agencies retain their right to intervene and take action against a management team or a board of directors for unsafe, unsound conduct, essentially irrespective of what the statute might say, meaning on top of what the statute would say. So I do believe that risk is addressed when you take Mr. Barr's effort to try to tailor using a broad definition of GDP. If one uses CPI, one captures the inflationary aspect, but you don't capture the economic growth. And I think that's one of the advantages that Mr. Barr offers, is that nominal GDP that captures both economic growth and the price level. And every 5 years seems to be, sort of a reasonable approach. So I want to say I support this bill and calling attention to all this myriad of sizes that have not been indexed in any way and deserve adjustment, some after 15 years, of time. So I want to thank the Chairman Barr, and I want to yield some time to him. Give me some time to conclude, but yes, let me yield your time.
Just thank you
Please.
for yielding. Just a few points. The gentleman from Massachusetts, my friend, says he doesn't see the sense in this. I'll tell you who does see the sense in this. The top bank regulator in the United States of America, Michelle Bowman. We collaborated with the Federal Reserve, the Vice Chair of Supervision, on what would be appropriate, and it was her recommendation that we use the nominal GDP as opposed to the CPI number. The ranking member says that we need to be data-driven. Well, we are. We're driven entirely by the data here. We're driven by the data of GDP growth. When we talk about bracket creep, we're not talking about, this is not even regulatory relief. This is just preventing bracket creep. This is preventing regulations that were never supposed to apply to banks of these sizes to apply. And in terms of this idea of we're just going to be ignoring risk. No, we're not. This bill doesn't eliminate regulation or bank supervision. If it's the FDIC examiners will still be in all these banks after this bill becomes law, hopefully. If it's a national bank, a small national bank, the OCC will still be in charge. If the Federal Reserve will still be supervising the holding companies. If it's a state chartered bank, the Kentucky Department of Financial Institutions will still be there. It's not like they're no longer going to have any supervision whatsoever or bank exams. They will. This is just simply accounting for the growth of the overall size of the economy. With that, Mr. Chairman, I'll yield back to you.
I think the chairman, I'd urge a yes vote on this, and I'd ask the ranking member of the subcommittee and the chairman to work with the Fed on providing education and also streamlining everything we're doing on how many levels that are touched. So I urge a yes vote. I yield back. Does anyone else seek recognition? Hearing none, we'll move to amendments. Is there anyone seeking to amend Mr. Barr's bill?
Amendment.
The ranking member has an amendment at the desk. We'll pause for it to be distributed. Yeah.
Reserve a point of order.
Gentleman from Kentucky reserves a point of order. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 7056, offered by Ms. Waters of California, designated as Waters 136.
Without objection, this amendment is considered read, and the gentlewoman from California is now recognized for 5 minutes to describe her amendment.
Thank you, Mr. Chairman. My amendment would simply ensure that one of the thresholds from our banking laws that Representative Moore forgot to include is added to his long list of other thresholds that are amended. Specifically, my amendment would increase the FDIC deposit insurance limit and National Credit Union Administration share insurance limit to $550,000 based on nominal GDP growth since when Congress initially increased the limit to $250,000. Like the other thresholds in the bill, the deposit insurance limit would continue to rapidly grow based on nominal GDP growth. This approach would help a number of small businesses, churches, and nonprofits who have previously lost money when their community bank failed, but they were too small to use systemic tools like Silicon Valley Bank. My amendment will help level the playing field, allowing for community and mid-sized banks to compete with the largest banks for those business accounts. Now, listen, there is broad bipartisan support to increase the deposit insurance limit. And this is even supported by Trump, the Trump administration. Now, I don't understand, 250,000 was initiated when? How many years ago? 2010. No, earlier than that. Anyhow, it's long overdue for increase. And I think for all of the reasons that I have enunciated here, that really should be looking at increasing the deposit insurance rate. I yield back the balance of my time.
Gentleman yields back. Does the gentleman from Kentucky insist on his point of order?
Withdraw the point of order.
Gentleman withdraws his point of order. Who seeks recognition on the Waters Amendment? Mr. Barr?
Thank you, Mr. Chairman. Move to strike the last word.
You're recognized for 5 minutes.
Thank you. So I appreciate the gentlelady's amendment, but this bill but I oppose it because this bill is about indexing regulatory thresholds for small banks to account for inflation and economic growth. Tackling broader deposit insurance reform through this bill is inappropriate. Deposit insurance reform is a legitimate topic, and the chairman has rightly included it on our agenda, and we have had briefings and hearings about deposit insurance reform. But this bill is not the vehicle for that. We have not concluded our review of the data and the issue, and the committee has taken a data-driven approach to this issue, and we will continue to do so. The committee has been examining proposals for broader reforms to the deposit insurance framework, and we will ensure that robust conversations occur before making decisions that could greatly impact the banking system. The committee sent a letter to the FDIC in December asking for more data to help inform our review. A key concern raised by that letter was that the data reported by banks on call reports is insufficient to target any proposals that would raise the insurance limit for specific account types. Similarly, without that call report data, it's impossible for the FDIC to make accurate estimates of the additional assessments banks would have to pay. I've communicated this concern to the Mid-Sized Bank Coalition, and they are working on trying to help get us additional data so that we can make informed decisions on this. It is important that we are thoughtful about any additional coverage, including the costs that it may impose on financial institutions, especially community banks, through higher diff assessments. And so I ask and urge my colleagues to oppose this amendment, but I look forward to continuing to work with all of my colleagues, including the ranking member, as we take a deliberative approach to deposit insurance reform. And I yield.
Gentleman yields back. Who seeks recognition? The gentleman from Oklahoma.
Mr. Chairman, I move to strike the last word.
Gentleman's recognized for 5 minutes.
Thank you, Mr. Chairman. As many in this committee know, I think the President's proposal to raise deposit insurance coverage levels for non-interest-bearing transaction accounts is a good one. And I'm actively working with my colleagues to see that the proposal moves forward. With that said, I don't believe Mr. Barr's bill is the correct venue to do that. Let's keep Mr. Barr's bill on the thresholds as it is, and then work together on improving deposit insurance. I encourage my colleagues on either or both sides of the aisle to work with me in improving this system. And with that, Mr. Chairman, I yield back.
Gentleman from Oklahoma yields back. Who seeks recognition on Ms. Waters' amendment? Hearing none, all those will consider the amendment. All those in favor, please say aye. Aye. All those opposed, please say no. No. The nays have it. And in the opinion chair, the nays have it, and the amendment is not adopted. We'll now move to the next amendment. Is there another amendment to Mr. Barr's bill? The gentlewoman from California.
Thank you very much, Mr. Chairman.
You have an amendment at the desk,
It has
I
to be
believe.
passed.
Yes.
Yeah.
So we're going to let the clerk pass that out, and then we'll recognize you.
Reserve a point of order.
Gentleman from Kentucky reserves a point of order on this second Waters Amendment to the Bar A&S. Hey, Kyle, I'll read those back to back. Is that? Mark does this one, and then I respond, yeah. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 7056, offered by Ms. Waters of California, designated as H.R. 7056-03.
Without objection, this amendment is considered read, and the gentleman from California is now recognized for 5 minutes to describe
Thank you
her
very much,
amendment.
Mr. Chairman. Members, as the president is finally waking up to we have an affordability crisis in this country, it's getting harder and harder for too many of our constituents to not only buy a home and build wealth, but even to make ends meet, with prices for groceries going so high that some people are using buy now, pay later products, even to buy food for their families. Meanwhile, big banks and credit card companies are making record profits and have plenty of room to give consumers a break. As the Wall Street Journal recently put it, I quote, Wall Street is rolling into the new year firing on all cylinders after the nation's biggest banks had one of the strongest years on record in 2025. The biggest banks brought in some $593 billion in revenue in 2025, up 6% and better than any prior year. The bank CEOs are doing well too. Jamie Dimon at J.P. Morgan made a $707 million windfall based on their stock last year, while Capital One's CEO made $300 million and Citi's CEO made $100 million. Yesterday, Trump, who has suddenly realized apparently that the affordability crisis isn't a hoax or a scam, as he previously suggested. But don't forget, I told you he'd change his mind anytime. And so we don't know where he really stands. Is now offering up all sorts of proposals to try and lower costs. We don't know what will be happening tomorrow morning when we wake up. Trump said, and I quote, one of the biggest barriers to saving for a down payment has been surging credit card debt. The profit margin, let me just make sure I get this out of here. The profit margin for credit card, let's see, companies now exceeds 50%. One of the biggest, and they charge Americans interest rates of 28%, 30%, 31%, 32%. What happened to usury? He went on to say, and I quote, I'm asking Congress to cap credit card interest rates at 10% for 1 year, and this will help millions of Californians save for a home. They have no idea they're paying 20%. They go out and they are a little late in their payment and they end up losing their house. It's terrible, he said, quote unquote. So my amendment would allow Republicans to champion the president's proposal to impose a simple 1-year cap on credit card interest rates at 10%. This is an idea that has bipartisan support in the House and in the Senate, and I'm curious if any Republicans on this committee will speak or vote in support. I don't expect any of them will. I don't expect they're going to go against the president. But you know, while you're hanging out for the president, when you wake up tomorrow morning, he may have changed his mind anyway. And so, you know, you should be very cautious about giving him support on some of these crazy things. This is not a crazy thing. This is a good thing. This is a wonderful thing to reduce the credit card interest rates. But don't hold your breath until the President of the United States, do what he normally does. He will probably change his mind. So anyhow, I asked for a aye vote. Probably not going to give it. I'm asking for it anyway. Give me an aye vote.
Gentleman yields back. Does gentleman from Kentucky insist on his point of order?
Mr. Chairman, I insist on the point of order pursuant to Clause 7 of Rule 16 of the House Rules. The amendment is not germane to the underlying bill as it relates to a subject matter that is different than the underlying bill.
Chair is prepared to rule pursuant to Clause 7 of Rule 16 of the House Rules. The chair finds that the amendment is not germane to the underlying bill. Therefore, a point of order is sustained. Is there any other amendments?
Mr. Chairman, may I? If I may.
There be no further discussion or amendments to the bill. The question now occurs on the adoption of the amendment in the nature of a substitute. All those in favor signify by saying aye. Aye. All those opposed signify by saying nay. Pending the chair, the ayes have it. The amendment is adopted. Question now occurs on ordering the bill as amended, reported to the House with a favorable recommendation. Those in favor signify by saying aye. Aye. Those opposed signify by saying nay. Pending the chair, the ayes have it. For what purpose does the gentleman from Kentucky seek recognition?
Request a recorded vote.
Recorded vote is requested. All those in favor of recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3, the committee rules the vote on this question is postponed. We'll now move to the next bill. Pursuant to notice, I call up H.R. 5877, the Combating Money Laundering and Cyber Crime Act of 2025, which was introduced by the gentleman from Wisconsin, Representative Fitzgerald. The clerk will report the bill, which was distributed in advance.
H.R. 5877, to strengthen the authority of the United States Secret Service to investigate various crimes related to digital asset transactions and to counter transnational cyber criminal activity, including unlicensed money transmitting businesses, structured transactions, and fraud against financial institutions, and for other purposes.
Without objection, the bill is considered read, open to amendment at any time. Representative Fitzgerald has an amendment in the nature of a substitute, copies of which have been distributed in advance. The clerk will report that amendment.
An amendment in the nature of a substitute to H.R. 5877, offered by Mr. Fitzgerald of Wisconsin, designated as Fitz GE 074.
Without objection, the amendment is now considered read and will serve as the base text for purposes of an amendment. The gentleman from Wisconsin, Mr. Fitzgerald, you're now recognized for 5 minutes on your amendment.
Thank you so much, Mr. Chairman. The United States Secret Service plays a critical role in investigating cyber-enabled financial crime, including the illicit use of digital assets, through its global network of cyber fraud task forces and its longstanding expertise in financial investigations. Today, a growing share of cybercrime involves unlicensed money transmitting businesses, structured transactions designed to evade reporting requirements, and fraud targeting financial institutions as defined under the Bank Secrecy Act, which are generally not federally insured. That is why I was proud to introduce the Combating Money Laundering and Cybercrime Act of 2025 alongside my colleagues, Ms. Pedersen, Mr. Nunn, and Mr. Sherman, to clarify and strengthen the Secret Service's statutory authority to investigate money laundering and related offenses tied to illicit digital asset activity. This legislation harmonizes criminal law and banking law by explicitly ensuring that Secret Service has the authority to investigate money laundering, structured transactions, and fraud against financial institutions as defined in statute, closing gaps that sophisticated cyber criminals have been exploiting. The bill also extends from 5 years to 10 years the reporting requirement related to the FinCEN exchange, providing Congress with a greater long-term visibility into how information sharing between law enforcement and financial institutions supports high-impact investigations. I have consistently raised concerns about government surveillance of private financial transactions. Those concerns were made important and legitimate. At the same time, the FinCEN exchange remains the primary forum where law enforcement and financial institutions can jointly analyze suspicious activity reports and currency transaction reports to identify the most serious threats and disrupt transnational cyber criminal networks. This information sharing framework predates the Corporate Transparency Act and has been widely viewed as an effective tool when appropriately overseen. Extending the report requirement enhances congressional oversight and helps guard against misuse. Finally, the legislation extends from 6 years to 10 years a provision directing U.S. engagement at international financial institutions to support technical assistance and strengthens global capacity to combat money laundering and terrorist financing, recognizing that cyber-enabled financial crime is inherently transnational. Excuse me. This is a targeted bipartisan bill that strengthens law enforcement authorities, improves oversight, and better equips the United States to confront modern cybercrime without expanding new surveillance powers. I urge my colleagues to support this legislation. I yield back.
The gentleman yields back. Is there any further debate on the ANS?
Mr. Chairman.
Gentleman's recognized.
Thank you, Mr. Chairman. First of all, I want to thank the gentleman, Mr. Fitzgerald, for his thoughtful legislation. I know he's been collaborating with Mr. Sherman and others on our side of the aisle. In the past, I was chair of the anti-terrorist financing task force that we had on this committee before it became part of a full committee operation. I think the work that he is doing here is commendable. I think there's tremendous evidence that we do need to extend the provisions that he has identified. I also want to point out that the recent National Money Laundering Risk Assessment offers some examples that actually provide great support for Mr. Fitzgerald's legislation. One, they note that cybercrime groups linked to or receiving safe haven from Russia and the Democratic Republic of Korea, North Korea, have been responsible for an overwhelming share of recently identified ransomware-related incidents and have openly attacked U.S. organizations and businesses, and also included an indictment charging a Russia and U.S. national of creating, operating, and promoting Tornado Cash, which is a virtual asset mixer that facilitated more than $1 billion in money laundering transactions and which laundered hundreds of millions of dollars for the Lazarus Group, the sanctioned North Korean cybercrime organization. And I know Mr. Sherman and Mr. Fitzgerald worked on that aspect of it. So just saying I fully support this legislation. I think it's well thought out. It's well drafted. And I compliment my colleagues for putting that together, and I yield back.
The gentleman yields. The gentleman from Ohio, Mr. Davidson's recognized. Strike last
Thank you. I do move to strike the last word.
word. Gentleman's recognized.
I want to thank Mr. Fitzgerald for his continued leadership and commitment. This is thoughtful legislation. As chairman for National Security and Illicit Finance, I'm encouraged by the fact that there's no real partisanship in terms of going after scam centers and illicit finance, with some notable exceptions involving government fraud, but I digress. As financial crime increasingly moves its way online, cyber-enabled money laundering has become a core component of fraud schemes, scams, ransomware, identity theft, human trafficking, and other transnational criminal activity. The FBI's Internet Crime Complaint Center's 2024 report revealed that losses from investment fraud, including schemes involving digital assets, exceeded $6.5 billion. This underscores the notion that as our lives become increasingly digitally connected, so too does the cyber threat landscape. Our approaches to combining these forms of illicit activity, or combating these forms of illicit activity, haven't been fully leveraged the expertise of one agency in particular, which is the United States Secret Service. That's where this legislation kicks in. While best known for protecting our national leaders here in the United States, the Secret Service has played a crucial role in investigating and solving financial crime since its inception in 1865. However, the Secret Service has met limitations in its capacity to fully counter modern, sophisticated, cyber-enabled threats that we face today. H.R. 5877 would explicitly expand the Secret Service's statutory authorities to ensure its mission includes detecting, assessing, and responding to cyber-enabled money laundering risks. At a time when cybercrime is driving billions of dollars in losses each year for American citizens, it's important that we formally integrate the Secret Service's longstanding expertise and mission into our broader Anti-Money Laundering, Bank Secrecy Act, AML strategy. This reflects a bipartisan recognition that our AML policy must evolve alongside technology, and that the growth of digital assets protecting both our national security and the integrity of our U.S. financial system is vital. This bill would additionally extend congressional reporting requirements related to FinCEN, exchange a voluntary public-private partnership that serves as a forum for information sharing between law enforcement and financial institutions to identify high-value, high-impact financial intelligence. This program has been widely regarded within law enforcement and national security as a success. Extending these reporting timelines will help ensure sustained congressional oversight and a clear understanding of how frontline agencies and financial institutions are better equipped to detect, prevent, and investigate illicit financial activity. I support H.R. 5877 as a common-sense measure that strengthens the Secret Service's ability to combat cyber-enabled financial crime, while also reinforcing cooperation with partners in the broader global effort to disrupt illicit finance networks. This bill doesn't do everything in the space. There's a broad set of legislation that we need. Mr. Lynch referenced Tornado Cash, the company Samurai Wallet. And look, they were designated as a money service business when they were prosecuted and reached a plea agreement. But facilitating the storage of private keys is not operating a money service business. I think the law was improperly applied in that case related to the entities. Now, with regards to the individuals that pled to crimes, I don't know for sure whether they had an intent to facilitate illicit finance or not. But the idea that simply operating software or equipping someone to have self-custody of their own digital assets is illicit activity, I think that's why the reporting requirements are important. We need to be clear, and frankly, we need to overtly protect self-custody. We need to overtly protect decentralized finance because the law is being abused. And while I welcome Secret Service's engagement in this, and because they've been very effective and they pay attention at lower thresholds than others, there's a lot of lawfare that has been used by previous administrations to try to kill this industry. And I hope that we don't see that abuse continue here. So with that caveat, I do support the legislation and the effort, but I think there's a challenge for us in this committee to finally get clarity across the finish line. And the Senate is working on just that, and I hope they keep it integral by protecting self-custody. I yield back.
Gentleman yields back. Does anyone else seek recognition on the amendment in nature of substitute? Hearing none, we'll move to amendments. Does anyone wish to offer an amendment to the ANS? There being no further discussion or amendments on the bill, the question now occurs on the adoption of the amendment in the nature of a substitute. All those in favor shall signify by saying aye. All opposed by saying nay. In the opinion of the chair, the ayes have it, and the amendment is adopted. The question now occurs on ordering the bill as amended to be reported to the House with a favorable recommendation. Those in favor shall signify by saying aye.
Aye.
And those opposed signify by saying nay. In the opinion of the chair, the ayes has it.
Chairman, may I request a roll call on that?
A recorded vote is requested. All those in favor of a recorded vote shall raise their hand. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, the vote on this question is postponed. We'll now move on to the next bill. Pursuant to notice, I call up H.R. 1799, the Financial Reporting Threshold Modernization Act, which was introduced by Representative Loudermilk. The clerk will report the bill, which was distributed in advance.
H.R. 1799, to update thresholds for certain currency transaction reports and suspicious activity reports and for other purposes.
Without objection, the bill is considered read and open to amendment at any point. Representative Loudermilk has an amendment in the nature of a substitute, copies which have been distributed in advance. The clerk will report the amendment.
An amendment in the nature of a substitute to H.R. 1799, offered by Mr. Loudermilk of Georgia, designated as Louder 030.
Without objection, the amendment is considered.
Mr. Chairman, I reserve a point of order.
No point of order. Without objection, the amendment is considered read and will serve as the base text for purposes of amendment. The gentleman, myself, is recognized now for 5 minutes. I speak today in support of my bill, H.R. 1799, the Financial Reporting Threshold Modernization Act, a bill to modernize the current Bank Secrecy Act and anti-money laundering framework and adjust it for inflation every 5 years going forward. When Congress passed the Bank Secrecy Act of 1970, they did so with the clear intent to monitor significant and unusual financial transactions. The BSA has since served as the cornerstone of the U.S. anti-money laundering and counterterrorism finance regime. The law requires financial institutions to maintain records and file reports such as currency transaction reports and suspicious activity reports, and has been amended over the years to create an even more extensive framework to detect and deter financial crime. However, there are a few key components of the law that have needed evaluation and reforms for quite some time. For example, the Bank Secrecy Act established a $10,000 threshold for currency transaction reports. Now consider that in 1972, $10,000 was enough money to buy 2 brand-new Corvettes. It could represent a substantial down payment on a house or even several years of college tuition for children. In 1972, $10,000 exceeded the median household income in the United States. $10,000 was a significant amount of money in 1972. It does not represent the same value for consumers today. In fact, if you adjust for inflation, the threshold would represent roughly $80,000 in purchasing power. Furthermore, there does not need to be a crime or suspicion of a crime for a CTR to be generated, just the simple fact of crossing the $10,000 transaction threshold. As a result, the current threshold is grossly outdated and captures millions of commonplace transactions like used car purchases and small business cash deposits. Congress has also steadily expanded the definition of financial institutions that must report these transactions, capturing institutions such as car dealerships, insurance companies, and even the U.S. Postal Service. My bill simply raises the currency transaction report threshold from $10,000 to $30,000 and indexes it to inflation. It would also raise the current suspicious activity report threshold and index it to inflation. These changes would reduce the compliance burden for banks and credit unions by 60 to 80% while ensuring law enforcement still has access to this tool when needed. For years, I have heard from banks and credit unions in my district and across the country about the financial and administrative burdens these reports place on them. In fact, according to FinCEN's own data for fiscal year 24, there were approximately 4.7 million SARs and 20 million CTRs filed, with roughly 12,850 SARs and 56,000 CTRs filed daily from 324,000 registered financial institutions and other e-filers. The Bank Policy Institute recently conducted a survey of 15 of its member institutions with at least $100 billion in assets and found the average burden estimate of SAR filing was 21.41 hours per SAR. Those burdens are also acutely felt by our small and mid-sized community banks and credit unions. This begs the question, does all the effort from large and small financial institutions across the country to generate CTR and SAR reports lead to a flurry of law enforcement initiatives to crack down on illicit activity? Let's just look at the data. When it comes to IRS criminal investigations, FinCEN reported that only 13.3% of the investigations conducted in 2024 originated from reports required under the Bank Secrecy Act. That's down 13.9% in 2023 and 15.8% in 2022. According to IRS's own data, the agency conducted 2,667 investigations in 2024, meaning only 370 investigations originated from a BSA report. Let me put that into perspective. The financial services industry sends approximately $59 billion per year to generate roughly 27 million reports with the BSA regime, and only 370 of them are used to initiate criminal investigations. I think that the members of this committee owe it to our constituents and the financial institutions that serve them to evaluate whether these reports are useful in their current form. I would argue today that we have no real way to determine that because this committee has yet to receive the report from FinCEN to assess the appropriateness of the Bank Secrecy Act. I have often said that utilizing these reports to catch criminals is like looking for a needle in a haystack. All H.R. 1799 attempts to do is make that haystack a little smaller, allowing for law enforcement to better focus on real illicit finance risks. I urge my colleagues to support this bill, and I yield back. Does anyone else seek further recognition on the ANS?
I move to strike the last word. Move to strike the last word.
The ranking gentlewoman from California is recognized.
Thank you very much. I find this bill to be extremely concerning. This bill would undermine the Bank Secrecy Act by eliminating approximately 80% of currency transaction reports, that's CTRs, and 50% of suspicious activity reports, SARs, that banks to the federal government. The Bank Secrecy Act is America's law to combat money laundering, terrorist finance, and proliferation financing. It is a record-keeping and reporting statute establishing requirements for financial institutions to provide, quote, highly useful information to agencies that conduct criminal, tax, regulatory, intelligence, and counterintelligence investigation and other activities. These records, collectively called BSA data, are also designed to facilitate the tracking of funds related to illicit activity, to protect the U.S. financial system from bad actors, and to safeguard American national security. This bill would eliminate a significant portion of the BSA data used by law enforcement and other government officials to combat financial crime. These missing reports will impact the Federal Bureau of Investigation, that's the FBI, which investigates domestic and foreign terrorism, white-collar crimes, benefits fraud, and other bad acts. I would like to yield for a colloquy with the sponsor, Mr. Laudermack. Mr. Laudermilk, if you may, I'd like to have a colloquy. Did he leave? No, he's here. Yes. Mr. Laudermilk?
Yes, ma'am.
What does the FBI think about the effects of your bill?
Well, I'm sure that law enforcement agencies, including ICE, would love to even lower the threshold. But this is about protecting consumers' financial information, and it does not change the fact that all law enforcement agencies still will have access to the data through FinCEN and through the constitutional process, due process of a search warrant if needed. And financial institutions will still have suspicious activity reports.
Okay, reclaiming my time, it's my understanding that the Trump FBI thinks the bill will severely limit their visibility into potential illicit financial activity. And that's not surprising because you are taking away a key tool. Now, I'm a little bit confused because the Republicans have a reputation of being law and order, have campaigned on it for years, law and order. And now you're stripping away the ability for the FBI to deal with money laundering and all kind of illicit activity. I don't get it. Similarly, no, reclaiming my time, the Internal Revenue Service's Criminal Investigation Arm, IRS-CI, which does both tax and non-tax financial crime investigations, have published data showing that it searched BSA filings over 2.3 million times in 2024, and that 87% of its cases opened had a BSA record on the primary subject. Further, the IRS-CI's median cash in CTRs tied to their cases just over 22,000, a median that would be significantly diminished if this bill were to become law. So I ask unanimous consent to submit the March 25 IRSCI fact sheet and press record for the record. Which one is it? This
I
one?
got it. Without objection, it will be included in the record.
Thank you. This suggested, this bill helps tax cheats, frauds, traffickers, and terrorists. It also just suggests that it does nothing to help the people of Ohio, Mr. Loudermilk. Your home state suffered over 4,400 drug overdose deaths in 2023, according to Ohio health officials, and your state citizens reported over $1 billion of losses from cyber-enabled crime in 2024, according to the FBI. So I want to say one more thing. I agree that banks are making an effort here and that there may be changes that are appropriate to the thresholds. In fact, there may be changes that are appropriate to the whole of the BSA reporting process, but that has to be balanced with the needs of law enforcement and the needs of victims of financial crime. So if we weren't collecting the information, we'd never have a case for victims. Maybe 5,000 is nothing to Trump's Billionaire Boys Club, but 5,000 is a lot of money for most Americans.
Gentlewoman's time has expired. Who seeks recognition on Mr. Loud? Mr. Davidson, you're recognized.
Thank you, Mr. Chairman. And as chairman of the Subcommittee on National Security and Illicit Finance, we are, in a bipartisan way, very serious about combating illicit finance. And I had hoped that Mr. Loudermilk's effort would be bipartisan. As he illustrated in his opening remarks, if we simply kept up with inflation and really did no change would be something that was indexed to inflation. And this would be over $80,000. When you look at the price of a Corvette, as he referenced, that's even more expensive. Those have gotten even pricier. So the change, I am sort of surprised to hear the ranking member express the idea for change, but the change that the previous administration wanted to do with respect to surveillance on bank accounts was to take it down to below $600. But I guess unless you're doing government money, and then, you know, when DOJ wants to look at fraud, waste, and abuse, or other people, well, that's a problem that we look at the data there that we're spending with tax dollars. So it seems like they're against scams in a bipartisan way, unless it's scams against the government. I think it's disappointing that we couldn't get a bipartisan effort because, frankly, you know, Mr. Loudermilk's bill does represent a compromise against just indexing for inflation or indexing to GDP or costs of other things. So the Bank Secrecy Act, or BSA, served as cornerstone for the United States' approach to anti-money laundering. At its core, it was designed to standardize how our financial institutions and law enforcement detect, deter, and disrupt illicit finance activity in our system. Two most well-known tools in the BSA's toolkit are the Currency Transaction Report, or CTRs, and Suspicious Activity Reports, known as SARs. It's well understood that they are designed to work in tandem, not in isolation. As our financial system and economy have evolved, the sheer volume of CTRs and SARs being reported has grown exponentially, given their respective thresholds have not changed since 1972 and 1996, respectively. And they haven't proven incredibly effective. So less than 5 to 6% of them are even used, ever. So you collect more and more data, and you shrink the percentage that's even usable by law enforcement. So some, as I say, don't want to change this, or if they do, they only want it to go smaller. So if you care about making our system work, you want to increase the signal, not the noise. So instead of collecting more data and burying the illicit finance, you would refine it so it gets more focused. And I was encouraged to see FinCEN talk about just this approach. So there has been collaboration on it, and there's collaboration to even rethink in first principles about the kind of premise behind the Bank Secrecy Act, the whole third-party doctrine, the idea that if you choose to share your information with your bank, you no longer have an expectation of privacy, is a problem. The premise here is you haven't even committed a crime, but you've got a reporting requirement on cash. So I hope we go towards more freedom and less government, as this bill does, as we approach things, because we should. The right to transact predates any government, and frankly, the government shouldn't even interject itself without due process and probable cause, or at least reasonable suspicion. Now that's both balances individual liberty and the desire to solve our crimes. So I applaud Mr. Loudermilk for doing this, to seek, bipartisan solution. But let's recognize that even when he's tried compromise after compromise, they tend to move the football and walk away from it. So we're flooding FinCEN and law enforcement agencies with low-value data, lots of noise, and little signal. It's long overdue to change these thresholds. And I also thank the chairman for bringing this bill up. People have long avoided it because there's a you're making it easier to get away with illicit finance. Getting after illicit finance is getting better. We're getting better at it. Just last fall, we cracked down on a $15 billion scam center in Cambodia. So that's a significant chunk of GDP. So you recognize the scams are growing in scale and complexity. Americans, especially seniors, are being targeted. And we are working on bipartisan legislation to counter that. But this is not something that weakens it, it strengthens it. And I applaud Mr. Loudermilk and everyone who's co-sponsored it for getting it to this point, and I hope we get it across the floor and enacted. I yield back.
Gentleman yields back. Who seeks
Consent to
recognition?
submit to the record.
Gentleman's recognized for unanimous consent request.
Yes, I have a clemency grants by President Donald Trump, and I can see where he has basically pardoned about 70 criminals, and so I bet he likes this bill. I'd like to submit this to the record. Thank you.
Without objection, that will be added to our record. Who seeks recognition? The gentleman from Tennessee, Mr. Rose, you're recognized to strike the last word.
Thank you, Mr. Chairman. I move to strike the last word.
It was more than 70.
Mr. Chairman, move to strike the last word.
Gentleman's recognized for 5 minutes.
Thank you. In 1972, reporting a $10,000 cash transaction made sense. I think in that time, a Coke cost 10 or 15 cents, most places in this country. That was a very large sum of money. Today, that same threshold captures routine transactions that have nothing to do with the illicit activity Congress intended to monitor. When someone in Tennessee's 6th District buys a used truck or pays cash for farm equipment or cattle, their bank files a currency transaction report. That's not money laundering, that's just commerce in rural America. But our financial institutions are drowning in paperwork, filing reports on these everyday transactions. Raising the threshold would reduce compliance burdens on our community banks and credit unions by an estimated 60 to 80%, while law enforcement maintains the tools they need to catch actual criminals. Think about what this means in practice. Our community financial institutions are spending countless hours and significant resources processing and filing reports that add zero value to law enforcement investigations. Every currency transaction report filed on a legitimate business transaction is time and money that could be spent on customer service, small business lending, or keeping costs down for account holders. And it's not just the banks bearing this burden. The Financial Crimes Enforcement Network is overwhelmed with millions of reports annually, the vast majority of which document perfectly legal activity. By updating this threshold to reflect current economic reality, we help everyone. Banks can focus on actual suspicious activity. Law enforcement can focus on genuine threats, and consumers don't bear the hidden cost of outdated compliance requirements. Our small financial institutions shouldn't waste resources on regulatory compliance for transactions that pose little or no threat. This bill lets them focus on serving their communities instead of filing reports on routine purchases. I intend to co-sponsor this common sense reform and urge my colleagues to support it, and I yield back the balance of my time.
Gentleman from Tennessee yields back. Who seeks recognition? Gentleman from Massachusetts.
Yeah, thank you, Mr. Chairman.
You're recognized for 5 minutes.
Thank you. This bill, on its face, would basically eliminate a significant portion of the Bank Secrecy Act data that we get from the banks that go to law enforcement. And that allows government officials to combat fraud, terrorist finance, money laundering, and other financial crimes. This bill would mean that if it passed, that other financial institutions with reporting requirements would not be required to report applicable currency transactions or cash transactions under $30,000. It would not be required to investigate and report scams against their customers unless the victim's losses exceed $10,000. Now, I appreciate that the cost of a Corvette has gone up and education has gone up, but $10,000 is still a lot of money to the average American. It really is. If you get ripped off of, $10,000, that's a serious, serious blow to most Americans. That's more than their entire savings. So the other thing I want to point out is, Donald Trump's IRS, this is Donald Trump's IRS, their IRS Criminal Investigations Department was so concerned about the introduction of this bill that they issued a fact sheet to demonstrate the significance of the Bank Secrecy Act data to its operation. And they were very good in spelling this out. It noted in a press release that, quote, during the previous 3 fiscal years, 2022 to 2024, 87% of the IRS criminal investigations recommended for prosecution had a primary subject with a related BSA filing. So they're going off the data that you're no longer going to give them. And adjudicated cases resulting in 97% conviction rate. So we're getting the bad guys with this data, with defendants receiving average prison sentences of 37 months. This is coming from Trump's IRS. The IRS Criminal Investigation Department also said BSA data, it used BSA data to identify $21.1 billion in fraud tied to tax and for financial crimes. Also allowed them to seize $8.2 billion in assets tied to criminal activity and obtain $1.4 billion in restitution for crime victims. It's kind of like a tariff. So BSA data has also proven effective in helping the IRS criminal investigation and narcotics trafficking and pandemic-era tax fraud. So this is all stuff that we're using that Trump's IRS Criminal Investigation Department wants, and they're concerned about this bill. The other part of this is, Treasury, look, I agree. We're collecting too many CTRs, too many suspicious activity reports. We need to reduce that to take the burden off some of these banks. But this is not the way to do it. Jumping from 10,000 to 30,000 and leaving that huge gap. I do want to note that even Trump's Treasury has made useful and desirable clarifications to the guidance around the filing of cash transaction reports and suspicious activity reports. They get it. They understand the burden on these, especially smaller banks, and they're trying to reduce the number of those reports that are necessary. So I think we're going in the right direction. I think this is a huge leap. I think it exposes our banking system to tremendous fraud, and I think it really handcuffs FinCEN. It handcuffs the IRS Criminal Investigation Department. It handcuffs the FBI. So it's really making it easier for the bad actors, and we've got plenty of them out there. As the gentleman from Ohio noted, there's been some massive, massive frauds. So why are we making it easier for people to scam and harder for law enforcement to protect consumers? Even if it's only $10,000, that's a lot of money to the average American. And, we shouldn't be taking the lid off of, someone could get ripped off for massive amounts of money here, and the bank wouldn't have to report it. So for those reasons, I wish the member would think about, revising the limits here and work with us across the aisle. But if it stays in this similar form, I'd have to oppose it. Thank you. I yield back.
Gentleman yields back, seeks recognition.
Mr. Chairman, I'd like to.
Gentleman from Oklahoma.
Mr. Chairman, I would like to yield to Mr. Loudermilk.
The gentleman yields his time to the gentleman from Georgia.
Thank you, Mr. Chairman. Thank you, my friend from Oklahoma. We've heard a lot of things thrown around here today, and let me clarify something. This is not repealing the BSA, not at all. It's actually strengthening it. Because what you're referencing here is that that this is going to stop banks from reporting scams that are less than $30,000. It does not. The suspicious activity report is still in place. And if a banker sees something that is suspicious, regardless of the amount, they can report that. This actually cleans it up and reduces the noise. I use the analogy of finding a needle in the haystack. What we're doing is reducing the size of the haystack and eliminating banks arbitrarily, mandatorily reporting data and financial transactions that they know are not suspicious. They're normal in the daily activity. So it reduces the amount of noise that law enforcement has to go through or to filter through to actually find the perpetrators. I appreciate the sudden support of law enforcement. It was a refreshing change from just a couple hours ago when ICE was related to Satan, I think. And you're right. Law enforcement would love to reduce the limit to zero and be able to track every dollar from every person. But that is not feasible, it's not advisable, and it's unconstitutional. And the fact is, this bill has been out there since 2018. I have introduced it every Congress since the 115th Congress. So this isn't something that's just been dropped on everyone. We've been trying to negotiate this entire Congress on this. In fact, I think this is a huge compromise being at $30,000. If it was indexed to inflation, it would be over $80,000 today. But even if it was $80,000, it would not eliminate banks who know their customers better than anyone else of filing suspicious activity reports. They still can and will introduce or file suspicious activity reports. So I believe, after spending 30 years in the IT and the data security business, that this actually strengthens our law enforcement community. And with that, I'll yield back to my friend from Oklahoma.
Mr. Chairman, I yield back the balance of my time.
Gentleman yields back to the chair, seeks recognition. Let me, seeing nobody else speaking on the underlying A&S, let me recognize myself and then we'll turn to amendments. I want to thank the gentleman from Georgia for his decade of persistence in bringing up this issue before your efforts when you and I were both freshmen in Congress. Steve Pierce of New Mexico worked on this issue, trying to find consensus on both sides of the aisle about how to move the thresholds. I want to emphasize a couple of key points. First, on the responsibility of a bank before and after this bill. The responsibility they have is when they see something suspicious, they are to report it. That's not being changed in this bill. If they have a reason to suspect illegal activity involving $5,000 or more when a suspect can be identified, in other words, a person with a pattern of coming in and out of the bank, or $25,000 when there's no suspect, but it's just they're looking at transactions in the computer, they're still required to file a suspicious activity report. I know that's confusing because we have this cash transaction threshold of $10,000 moving to $30,000. But bad actors try to structure money laundering transactions, to avoid any number that's picked by this Congress. And I say, as a former banker of 3 decades, the suspicious activity rule is preemptive to the currency transaction reporting limit. Meaning, if you see something that looks suspicious, as I just indicated, you have to file. But one other feature that we haven't talked about today is what banks do for our small businesses that take cash in payment or use cash and receive cash from customers. And that's the exemption list that banks have to administer to that $10,000 currency transaction reporting. So moving that to $30,000 is beneficial to that retailer, beneficial to that equipment dealer, and to the bank, and that's something that hasn't been mentioned. So I'm convinced that I hear what law enforcement says because we've taken testimony for years about various law enforcement issues, and there's never enough data if you're an investigator. I mean, or even a federal regulatory agency. We want infinite data from every citizen. We'll promise we'll keep the PII secure, whether we will or not. So it's not surprising that somebody won't testify on that. But I just want to encourage members to, if their recognition, as Mr. Lynch has said, that, yeah, that was 50 years ago we set the limit, and you recognize that that's a legitimate comment that Mr. Loudermilk has made, I just would argue people are not abdicating their law enforcement investigative responsibility or their bank monitoring of suspicious activity. And I'm hopeful that one of the roles that artificial intelligence can play in compliance, in transaction monitoring at commercial banks and credit unions and broker-dealers is even being more accurate in looking for clearly structured suspicious transactions, whether they're $1 or $29,200. So I thank the gentleman from Georgia for the work and the constructive comments from members on both sides, and I urge a yes vote on Mr. Loudermilk's bill. I yield back balance of my time. Anyone else seek recognition on the A&S? Then we'll turn to amendments.
Amendment?
Yeah, so we're ready to turn to amendments on Mr. Loudermilk's A&S. Who has an amendment? Mr. Lynch, Mr. Lynch has an amendment at the desk. We'll pause for it to be passed out, distributed.
Mr. Chairman, could I reserve a point of order on this amendment?
Gentleman from Oklahoma reserves a point of order on the Lynch amendment.
Thank you.
Okay. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 1799 offered by Mr. Lynch of Massachusetts, designated as amend H.R. 1799-9.
Without objection, the amendment is considered read. The gentleman from Massachusetts, Mr. Lynch, you're recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Chairman, in support of federal law enforcement efforts to combat financial fraud and cybercrime, this amendment would preserve the ability of financial institutions to generate suspicious activity reports and currency transaction reports under the Bank Secrecy Act when suspicious activity involves the use of deep fakes and other artificial intelligence technology. If adopted, the increased reporting thresholds required by the underlying bill would therefore not apply in these AI-related cases. The Financial Crimes Enforcement Network, or FinCEN, has already issued multiple alerts on fraud schemes involving deep fakes that have been created with generative artificial intelligence tools to target and exploit financial institutions and American consumers. According to FinCEN, the agency continues to observe a marked increase in suspicious activity reporting by depository institutions, mortgage companies, and other financial institutions describing the use of fraudulent identity documents, photos, and other deepfake media to circumvent verification and authentication methods. The FBI has issued similar warnings regarding the growing threat stemming from the proliferation of AI-generated manipulated data, including images, video, and audio that is used to impersonate government officials, law enforcement personnel, and other trusted individuals. According to the FBI, more than 4.2 million related fraud reports have been filed since 2020, mostly involving deep fake scams and resulting in over $50 billion in losses. Our ongoing oversight work on this committee in the area of anti-money laundering and anti-terrorist financing has also revealed an explosion in AI-driven fraudulent activity. We have received multiple reports about malicious actors that are leveraging AI to gain access to personal financial information, to perpetrate extortion schemes, and even impersonate corporate chief financial officers to trick employees into completing fraudulent wire transfers or disclosing sensitive data. Given the surge in AI-related financial fraud, the FBI and other law enforcement agencies have underscored to our committee that now is not the time This has included President Trump's IRS criminal investigation team. This is not the time to severely limit their visibility into illicit financial activity. Regrettably, the underlying bill does just that by significantly increasing the reporting thresholds for currency transaction reports from 10,000 to 30,000, and for suspicious activity reports from 5,000 to 10,000. My amendment would ensure that in the case of deepfake and other AI-related fraud, a financial institution will still report suspicious activities even where the transaction amount does not meet these new higher thresholds. These reports are critical to the ability of law enforcement to identify criminal networks, connect related cases, build prosecutions, and recover stolen funds. We should not be raising the floor for reporting these dangerous and increasingly frequent sophisticated crimes and compromising law enforcement's ability to pursue justice for victims of AI-related crime. As ranking member for the Subcommittee on Digital Assets, FinTech, and Artificial Intelligence, I urge my colleagues to support this common sense amendment, and I yield back the balance of my time.
Gentleman from Massachusetts yields back. Does the gentleman insist on his point of order?
Mr. Chairman, I wish to withdraw my point of order.
Is there any further debate on this amendment? Mr. Loudermilk.
Move strike last word.
Gentleman from Georgia is recognized to strike the last word.
Thank you, Mr. Chairman. I appreciate what the gentleman from Massachusetts is trying to do here, but I do oppose the amendment because it is actually unnecessary. See, the underlying bill squarely addresses this issue, and adding redundant language does not strengthen the policy. It actually muddies it, which is what this bill is trying to do, is clear the water to allow law enforcement to more clearly identify bad players. Nothing in this bill does anything to change current law requirements to file a suspicious activity report when a financial institution believes it's being used to facilitate a scam, regardless of the transaction amount. In addition, nothing in this bill does anything to change the current law or the authorities allowing FinCEN to require currency transaction reports below a transaction threshold. How do we know this bill doesn't undermine our ability to fight scams? It's simple. Ask the institutions that have skin in the game. Every member on this committee knows that America's banks face enormous costs from scams, from customer reimbursements to investigative costs, from litigation to reputational risks, from regulatory penalties to higher insurance premiums. These institutions, they want to stamp out fraud because it's devastating to their operations. Well, guess who actually does support this bill? And, Mr. Chairman, I'd like to submit several letters of support for this bill into the record. First of all, is a letter from the American Bankers Association that includes all 50 state bank associations. All 50 state bank associations support this bill, including, and in addition to the Bankers Association of the District of Columbia and Puerto Rico. I have a letter from the Bank Policy Institute, a letter from the American Gaming Association, as well as America's Credit Unions, the Institute of International Bankers, International Community Bankers, Defense Credit Union Council, National Taxpayers Union, the U.S. Chamber of Commerce, and a statement of support from Nicholas Anthony at the Cato Institute, as well as a letter to Secretary Benson from 164 individual banks requesting an update to the BSA thresholds.
Without objection, they'll be added to the record.
Thank you, Mr. Chairman. These organizations have a vested stake in making sure that our anti-fraud policies work. They support reporting, but they don't support irrelevant reporting that squanders resources while doing nothing to protect their customers. That's why they are vocally supporting H.R. 1799, and so should all members of this committee. I yield back.
Gentleman yields back, who seeks recognition, the ranking member of the full committee, Ms. Waters.
I move to strike the last word.
You're recognized for 5 minutes.
I want to thank Mr. Lynch for his work on this amendment. This amendment would ensure that threshold increases do not apply to AI-related scams, including deep fakes. AI has a lot of potential as an emerging technology and could even be used to mitigate some of the burdens that banks cite to when it comes to these SAR and CTR reports. However, bad actors are seeking to exploit AI to defraud American businesses and consumers. As Director Agaki pointed out on November 13, 2024, his quote, diligence by financial institutions to the use of deep fakes and reporting of related suspicious activity will help safeguard the United States financial system and protect innocent Americans from the abuse of these tools, end quote. AI scams are on the rise, and they're becoming more believable as technology develops further. As I mentioned during debate on this bill, Americans cannot afford to lose $5,000, let alone $10,000 in this economy. We need to protect our American consumers and financial institutions from these bad actors. So I urge members to support this amendment. I yield back the balance of my time.
Gentlewoman yields back, who seeks recognition. Mr. Rose of Tennessee.
I move to strike the last word.
Gentleman is recognized for 5 minutes.
Mr. Chairman, I'd like to respond to Mr. Lynch's earlier statement, which referenced several IRS-CI Bank Secrecy Act-related statistics describing how that data is used to support criminal investigations, prosecutions, adjudications, and convictions. In March of 2025, IRS-CI disclosed that during fiscal years 2022 through 2024, its special agents conducted on average, or an average of approximately 966,900 searches per year of currency transaction reports. Over that same period, 2022 to 2024, FinCEN data showed that a total of 61.9 million CTRs were filed. This means that the IRS CI, or Criminal Investigation Unit, accessed roughly 0.05% of all CTRs filed during that time frame. I just point out that, again, as my friend Mr. Loudermilk has made clear, we are talking about reducing the size of the haystack so that we can, and law enforcement is not sifting through countless normal, everyday transactions. And we, again, have to put this in the context of when this $10,000 limit was set in my childhood, and how much the transaction values have changed in relative importance over that period of time. So I think, as Mr. Loudermilk has said, this is his bill is a modest move in the right direction. I'd like to see us go much further, and I think it would make good sense in terms of the allocation of our scarce resources. And so, again, I'm certainly opposed to this amendment and favor the bill as it's been presented by Mr. Loudermilk. Thank you. Mr. Chairman, would you like some time? I yield back.
Gentleman from Tennessee yields back. Who seeks recognition on the Lynch amendment? If we don't have any other speakers, all those in favor of the Lynch amendment, please say aye. Aye. All those opposed, please say nay. Nay. Didn't show the nays have it. Nays have it. The amendment is not adopted. We'll now move to the next amendment.
Yeas and nays?
Gentleman has requested the yeas and nays. A recorded vote is requested. All those in favor of the recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3, the committee rules further proceeding on the amendment are postponed. We'll now consider additional amendments to the Loudermilk bill. Ms. Tlaib.
Thank you so much, Mr. Chair. I have an amendment at the desk.
Ms. Tlaib has an amendment at the desk. We'll pause while that's distributed.
Mr. Chairman,
Gentleman from Oklahoma.
I'd like to raise a point of order on this amendment.
Gentleman reserves a point of order on the Tlaib amendment. Clerk will report the amendment.
An amendment to the amendment in the nature of a substitute to H.R. 1799, offered by Ms. Talib of Michigan, designated as amend H.R. 1799-15.
Amendment will be considered as read, and the gentlewoman from Michigan, you're recognized for 5 minutes to discuss your amendment.
Thank you, Mr. Chair. As we understand in this bill, it would increase the threshold for suspicious activity reports from $5,000 to $10,000. In general, I think we should make it even harder, not easier for criminals to mask their activities, illegal activities. I'm also incredibly concerned of the timing, especially because this bill may limit future efforts to investigate the financial activities of Jeffrey Epstein. As you know, many banks failed to file the reports, and some are still filing the reports years later after his death. We are still waiting for the administration to release all of the Epstein files, and there may still be information. Again, the banks have not provided or reported, and they have a reputation to that and some, I don't know, a culture from within to not report it until they're forced to. But when I met with survivors, Mr. Chair, you heard me say this, and they were so clear. A number of them said, follow the money. And so we shouldn't take any action that could hinder ongoing and future investigations. That's why I'm offering this amendment. It would ensure that none of the changes proposed in this bill would go into effect for financial activities of Jeffrey Epstein, his businesses, or his extended network. We know the Treasury Department has suspicious activity reports now, not in the millions, but the billions. It's thousands of transactions totaling $1.5 billion in total. These transactions represent one of the key ways that Jeffrey Epstein was able to build his sexual abuse and trafficking empire. It is disgusting and so horrific to have Americans, women, come to us begging us to do more to make sure this never happens again. We know Jeffrey Epstein had many enablers. When J.P. Morgan Chase, Bank of America, and others decided to look the other way, and that's exactly what they did, when they failed to adhere to the Bank Secrecy Act and file timely suspicious activity reports, they enabled Epstein's horrific crimes. But it is obviously not just the banks. Many of Epstein's enablers are still hiding in plain sight, Mr. Chair. Who fueled the planes? Who moved the money? We deserve to know, and they deserve to be brought to justice and justice for the survivors. If and when future evidence comes to light, this bill would change what banks are required to report. The banks have already shown a lack of urgency, as you know. They have a reputation when it comes to the interests of Epstein's crimes. I don't want to make it easier for them to let those who enabled the horrific abuse off the hook. We must not allow, Mr. Chair, Epstein's enablers to evade justice. They must face the full consequences of their actions. Jeffrey Epstein's countless victims deserve a complete and thorough investigation. They deserve justice. The public deserves the full story, and my amendment will help ensure we don't prevent it from all coming out. And again, I urge my colleagues to please, again, support this amendment to ensure that anything related to Epstein is not, that the threshold increase does not impact, being able to have discovery in those documents. With that, Mr. Chair, I yield the balance of my time to the ranking member.
She's yielded to you, Ms. Waters. She's yielded to you.
I move to strike the last word.
No, it's her time. She's yielded 1 minute, 33 seconds.
Oh, thank
if
you very
want.
much. Thank you very much. Let me just say that, in this discussion that we've been involved in, I started out by saying that, the reefs, for the most part, are known as the law and order Republican Party. And to have any instances where they would be relaxing ways by which the banks could, be in control of suspicious activity for as low as $5,000, now can ignore all of that and just go to looking at $10,000 and $30,000 and all of that is baffling to me. I don't understand. The FBI, this is Trump's FBI that's involved in this issue. And I do believe that the Republicans, for the most part, know and understand what is happening out there with fraud. You know, I said earlier, and I was, you know, being a little bit facetious about it, that the president had been involved with 70 pardons. Ladies and gentlemen, it's more like thousands of pardons, not 70 pardons. And so here we are again, faced with an issue where clearly
Gentlewoman's
everyone should
time
be.
has expired,
Thank you, I yield back.
and the gentlewoman yields back. Does Mr. Lucas insist on his point of order?
Mr. Chairman, I would withdraw my point of order, please.
Point of order is withdrawn. Is there further debate on the Talib amendment? The gentleman from Georgia?
That was her time.
Move strike last word.
You're recognized for 5 minutes.
Oh, thank you, Mr. Chairman. Look, I oppose this amendment mainly because this is using an incredible atrocity as a stunt that should be rejected. As we already know, nothing in H.R. 1799 changes current law authorities regarding suspicious activity reports. Nothing. Moreover, there will be no SARS filed on Jeffrey Epstein because he's dead. Now,
Mr. Chair,
Ms. Talib's amendment.
Mr. Loudermilk's time.
I know.
Ms. Talib's amendment would also implicate any associate of Jeffrey Epstein. Perhaps she intends her amendment to include SARS filed on former President Bill Clinton or former Treasury Secretary Larry Summers. However, Ms. Talib has nothing to fear under H.R. 1799. Financial institutions must still file SARS when a financial institution suspects it is being used to facilitate a crime. Former President Clinton can still be held accountable, just as he was recently held accountable by the House Committee on Oversight and Government Reform when he was held in contempt for refusing to appear for a deposition. Our colleagues here, Mr. Lynch, Ms. Presley, and yes, Ms. Talib, voted with Republicans on this resolution, and I appreciate that. Ms. Talib also voted to hold former Secretary of State Hillary Clinton in contempt.
It's Mr. Loudermilk's time.
Well, I
Loudermilk's time.
apologize, and I withdraw that comment. As we all know, the full House has also already voted for the full release of Epstein-related documents. So again, this amendment is nothing but a stunt, and it would do nothing to change what is already in law. All of this can be done even under my bill. I urge my colleagues to reject this amendment, and I yield back the balance of my time.
Mr. Loudermilk yields back. The ranking member.
I move to strike the last one.
You're recognized for 5 minutes.
Yeah, I think it's really important for the public to know Bank of America did not file any of their SARS, the suspicious activity forms, until 2020, 170 million years after Epstein's death. This is important because Bank of New York Mellon did not file any of their suspicious activity forms. By the way, it was $378 million worth of reports. Did not file it until 2019, after his death. You see the pattern here? JP Morgan didn't even do it until, 2013, and then they're still trying to submit more forms. Deutsche Bank, same thing. I can go on and on. TD Bank didn't file until 3 months after Epstein's arrest, and then in 2019, I think they even issued some more, two months after his death. I just think that there's a pattern here, and it needs to be told in regards to the state suspicious activity reports. I just have a question for the chair, through the chair. Does this bill increase the threshold of suspicious activity reports from 5,000 to 10,000?
No,
It does not.
it does not. This is a cash transaction report and goes from $10,000 to $30,000.
Is that
And-
accurate?
And if the gentleman would continue to yield, it's prospective. If this,
A woman cannot yield to you.
Hold
It's
on.
my time. However, I yield to you.
I can yield back to the ranking member, but I believe
Yeah.
this increases the threshold. It increases the threshold. Yes or no? Because one, there's inaccuracy about how I voted, because I don't care who it is, the Clintons or Trump or anybody. I will hold somebody in contempt. These sexual abuse survivors deserve justice. But
any
Mr.
bank
Chair,
that sees something that's suspicious,
but does
has
it
to
increase
report
the
it.
threshold, Mr. Chair?
it $5,000, if it's identified with a
To
person, it has to
10,000,
be
correct?
reported.
Excuse me.
But I think it's been the public is being misled here, because I hear the comments that hasn't. Is it or not? If I'm mistaken, I apologize, but does it increase the threshold from 5,000 to 10,000? I'm asking that it doesn't get increased. when it comes to Epstein. That's all I'm asking. But you guys are saying that doesn't change. What are you talking about? My amendment basically is trying to address the fact that you did increase the threshold, and you're saying you're not.
The gentle lady continues on my time. Continue.
Yeah, and I just want folks to know, it's very clear. The suspicious activity report threshold increased from 5,000 to 10,000. And all I'm saying, not even the other transactions, which all should never be, I'm saying just for Epstein-related files. And guess what, to my wonderful colleague on the other side, if there isn't any Epstein-related files, suspicious activity reports that apply, then great, it won't apply to them. But I'm saying we need to exempt, especially now, in this moment where we're expecting more documents from banks and other folks, that we need to make sure that this increase of threshold to trigger suspicious activity reports is not applied to Epstein-related network or his activities.
Well, the
That's all
gentlewoman
I'm
yield.
saying. Actually, I would. I see I'm nice. I will leave you.
The gentle lady
Oh, I'm
cannot
so
yell.
sorry.
The time belongs to me. Are you sure you're finished?
I think so, but I just don't want
All right,
people
I'll yield to the
being
gentleman.
misled here about this bill.
All right, thank you.
And I'll yield back to
I
you.
yield to you.
Just want to make a point of clarification. It raises a threshold, but it is not applicable to, when it comes to suspicious activity, the thresholds don't matter. Banks can report any suspicious activity.
Reclaiming my
regardless of the
time,
amount.
I yield back to the gentle lady.
I think just to be clear, why can't we just say it does not do that? I want to work with all of you because I'm really worried that we're getting another out for the banks that did not even report suspicious activity reports. It does increase the threshold. Then why you guys put it in there if it doesn't apply? No, you guys can smile and laugh all you want. Why put it in there? The banks, the lawyer, if I'm a lawyer for a bank and I see that, you know what I'm going to say? I'm going to say, I don't have to do it. It's not $10,000. I know it's criminal and it's suspicious, but I'm not going to report it because the law says 10,000. If I'm their lawyer, I would tell them you're not required by law because it's not 10,000. That's exactly, well, you have a loophole here. All I'm saying, just do it for Epstein. The other parts of criminal activity that happens, and you know money is getting moved in very creative ways now, and people are hurt by that. But I'm just saying, you cannot mislead the public and say they have to report it. Guess what? They didn't report it for years. And I don't want them to have another out and say, well, that doesn't reach the 10,000 threshold. My amendment makes it very clear. If it's at the current threshold of 5,000, you're reporting it.
Reclaiming my time, I want to thank Ms. Tlaib for her work on this amendment.
Woman's time has expired. Who seeks recognition? Seeing no other people seeking recognition, I'll recognize myself to strike the last word on this amendment. I'd like to make the point about, first of all, any bank who is reviewing anything under any circumstance has an obligation to report a suspicious activity report at any level if it's criminal behavior, structuring money laundering, undocumented reporting, period. And I think Ms. Tlaib actually made the case when she said that some of these banks that she put into the record didn't follow it in a timely way. They went back and recreated the records and researched the records to find out years after the fact because Epstein was deemed a very suspicious person, obviously. So no one here condones any of that. But one point that has not been made in this debate is this is about amending a law to take place in the future if it were enacted into law. And everything that had to do with Epstein, Epstein's network, Epstein's friends, Epstein's banks, anything that had to do with Jeffrey Epstein from day one until post-death is governed by the existing law, not this law. So they're under the obligation, if you take the argument, which you do, that you want it status quo. Well, it is status quo in my judgment, vis-a-vis this. So I thank the woman for raising this. No one has any toleration for Epstein and all this, and I want to compliment publicly on the record the Oversight Committee on which you serve and Comer's work to disclose material and bring to light the crimes and syndicated crimes and network of Jeffrey Epstein. But I still urge a no vote on the Tlaib amendment. And I yield back to my time. If there's no further debate, the question now occurs on the Tlaib amendment. All those in favor of the amendment shall signify by saying aye. Aye. All those opposed signify by saying nay. Opinion of the chair, Opinion of the chair, the nays have it. Nays have it. Amendment is not adopted.
Mr. Chair, can I request?
The gentlewoman has requested a recorded vote. The recorded vote's requested. All those in favor, record vote, raise your hand. Sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, further proceedings on the amendment are postponed. We'll now move to the next amendment on Mr. Loudermilk's bill. The ranking member has the amendment at the desk. We'll pause while it's being distributed. Clerk will report.
An amendment to the amendment in the nature of a substitute to H.R. 1799, offered by Ms. Waters of California, designated as H.R. 1799-001.
Gentleman from Oklahoma.
Mr. Chairman, I raise a point of order on this
Gentleman
amendment.
from Oklahoma reserves a point of order. Without objection, Ms. Waters' amendment will be considered read, and we recognize the ranking member to describe her amendment for 5 minutes.
Thank you very much, Mr. Chair. In 2021, the Treasury Department issued its first set of anti-money laundering and countering the financing of terrorism, AMLCFT. That was the national priorities directed at financial institutions with Bank Secrecy Act, that is BSA, compliance responsibilities. The AML/CFT priorities reflect longstanding and continuing financial crime concerns, are intended to assist banks and other financial institutions with focusing resources and efforts on tackling the most urgent, significant threats identified by Treasury and its local enforcement and national security partners. The priorities assert that transnational criminal organizations, that is, TCOs, operating in the United States, including drug trafficking organizations, are priority threats due to the crime-terror nexus and TCOs' engagement in a wide range of illicit activities, including cybercrime, drug trafficking, fraud, wildlife trafficking, human smuggling, human trafficking, intellectual property, theft, weapons, trafficking, and corruption. These are crimes with notable financial components that affect our communities across the nation, regardless of whether it's a so-called red or blue state or district, from drug dealers and opioid deaths to modern slavery to escrow stealing, real estate scams. The list goes on, and that includes fentanyl. This bill, H.R. 1799, would eliminate a significant number of the records that law enforcement uses to detect these crimes and to map out the illicit networks that support the criminals. It would eliminate the records used to trace the professional money launderers from China and elsewhere, and it would limit the information available to allow for potential victim restitution through asset forfeiture. So, to be very clear, the proposed change to the currency transaction that is reporting, that is the CTRs, threshold from 10,000 to 30,000 would wipe out a projected 80% of all CTRs that are filed. It would also wipe out a significant number of the suspicious activity reports, that is the SARs, filed by increasing the threshold from 5,000 to 10,000. This would eliminate not only all SARs in between, but also any SARs related to CTRs that would no longer exist. These are records used by law enforcement to pursue TCOs. To ensure that our communities are protected, I urge my colleagues to join me in voting for this amendment that that would ensure that the current thresholds continue to apply whenever the suspicious activity is detected by financial institutions involving transnational criminal organizations and their bad acts. Stand up to transnational organized crime by continuing the access that law enforcement has to these important records. I urge members to support this amendment, and I yield back.
Gentlewoman yields back. Does the gentleman insist on his point of order?
I withdraw my point of order,
Is
Mr.
there
Chairman.
further debate on this amendment? There's no further debate. The question now occurs on the amendment. All those in favor of the amendment shall signify by saying aye.
Aye.
All those opposed signify by saying nay. Nay. Opinion of the chair, the nays have it. Nays have it. The amendment is not adopted. We'll now move to the next amendment. Seeing no further amendments, without objection, the previous question, the substitute is ordered and recorded votes on the pending amendments have been
Asking for a
postponed.
recorded vote.
I'm sorry, too late, madam.
No, it's not.
Once these
Recorded
votes are
vote.
taken, the committee will immediately vote on adoption of the amendment in the nature of a substitute, and then we'll consider the question to report the measure. We'll now move to the next bill. Pursuant to notice, I call up H.R. 6967, Public Company Advisory Committee Act of 2026, which was introduced by Representative Lucas. Committee will report the bill, which was distributed in advance.
H.R. 6967, to amend the Securities Exchange Act of 1934 to establish within the Securities and Exchange Commission the Public Company Advisory Committee and for other purposes.
Representative Lucas has an amendment in the nature of a substitute, copies of which were distributed in advance. Clerk will report the amendment.
An amendment in the nature of a substitute to H.R. 6967, offered by Mr. Lucas of Oklahoma, designated as Lucas 023.
Without objection, this amendment will be considered read and serve as base text for the purposes of amendment. The gentleman from Oklahoma, Mr. Lucas, is recognized for 5 minutes to describe your amendment.
Thank you, Mr. Chairman. I want to speak today in support of my bill, H.R. 6967, the Public Company Advisory Committee Act. H.R. 6967 would establish an advisory committee within the SEC to provide a formal communications channel for public companies to provide advice and submit recommendations to the Commission. My bill specifies the issues of the committee will focus on: public reporting, market trading, corporate governance, and capital formation. A public company advisory committee will help identify any technical or implementation issues with regulations before they happen and prevent unintended consequences that could result in years of administrative delay. An advisory committee will help make regulations durable by providing substantial and diverse industrial feedback and meaningful engagement between the Commission and the companies it regulates. This type of formal mechanism for the SEC is to provide recommendations from specific stakeholders is not new. 2 advisory committees are currently operational, including the Investor Advisory Committee and a Small Business Capital Formation Advisory Committee. Additionally, 3 other advisory committees on asset management, fixed income market structure, and emerging companies have operated in the past. My bill would simply add to this list an advisory committee focused on the unique regulatory issues faced by public companies. Some have said that H.R. 6967 would affect investor protections, and I respectfully but emphatically disagree. As I mentioned, the SEC has a standing investor advisory committee that will remain intact. Its purpose is to provide the SEC with advice and recommendations on protecting investor interest and promoting investor confidence. My bill does nothing to change that. H.R. 6967 merely adds an advisory committee focused on issues related to public companies at no cost to investors. The committee would provide advice and recommendations. It wouldn't promulgate rules or affect enforcement actions. I wouldn't think this would be controversial. But I want to thank Ms. Pedersen for her partnership, and I look forward to a strong bipartisan vote advancing our bill today. And I yield back.
Will the gentleman yield?
The chair would yield to the gentlelady from Missouri.
I thank the gentleman for yielding, and I want to thank Congressman Lucas and Congresswoman Pedersen for their bipartisan leadership on this legislation as the chairman of the Capital Markets Subcommittee. that falls under this jurisdiction. The SEC currently operates advisory committees, as the gentleman has said, for investors and for small businesses. Yet public companies themselves have no comparable formal body to provide feedback to the Commission on regulatory proposals that directly affect their operations. This gap matters because public companies are uniquely positioned to identify practical compliance challenges and operational impacts that may not be apparent during the rulemaking process. Their input can help the Commission design more effective regulations from the very outset. As markets evolve rapidly with new technologies like artificial intelligence, complex proxy battles, and challenging shareholder dynamics, the SEC would benefit greatly from structured input from experienced corporate practitioners. The Capital Markets Subcommittee has consistently emphasized the value of informed input during the regulatory process. This legislation fills an institutional gap in a limited and very measured way. This legislation creates a balanced forum for that expertise without compromising the Commission's independence or investor protection mandate. I, too, urge my colleagues to support this bipartisan piece of legislation, and I yield back to the gentleman from Oklahoma.
I want to thank the subcommittee chairwoman for very thoughtful words, and with that, Mr. Chairman, I yield back.
The gentleman from Oklahoma, the author of the bill, yields back. Who seeks recognition? The ranking member.
I move to strike the last word.
Gentlewoman is recognized.
This bill would establish a formal advisory committee comprised entirely of corporate directors, officers, trade association executives, and their professional service providers. By design, this committee excludes the very people the SEC is tasked with protecting, the everyday investors, pensioners, and workers whose savings depend on fair and transparent markets. Now, let's be clear. Public companies are not struggling to have their voices heard at the SEC. These entities already employ armies of lawyers, bankers, and lobbyists. They already spend millions of dollars a year to petition this Congress and the SEC. There is absolutely no reason why the American taxpayers should subsidize, pay for, spend our money on a platform for these billion-dollar entities to advocate for their own interests. This is ridiculous. Not to mention, according to SEC Chair Atkins' public record, the chair has taken meetings with dozens of public companies and industry trade associations, but guess what? Not a single meeting with retail investors or small business, not one, not one. This bill simply enhances the existing front row seat corporate insiders have to influence the SEC's thinking on everything from proxy voting to disclosure requirements. It creates an inherent conflict of interest where the regulated parties are the primary advisors to their own regulator. If we're going to establish advisory committees that affect particular issues at the SEC, they should be balanced and represent the full spectrum of participants affected by those issues, including retail investor advocates, consumer groups, and labor representatives. Instead, this bill creates an echo chamber for corporate executives and their advisors to complain about the very rules that are designed to hold them accountable. While it is true that small businesses and ordinary investors have their own advocates within the SEC, this is because, writ large, they are not in a position to afford the litany of advisors and advocates that the large public corporations can afford to push their mission in D.C. At a time when Congress should be addressing the many Americans that are struggling to pay the bills, this bill provides a permanent government-sanctioned megaphone for the richest folks on Wall Street and in the corporate world. My God, I urge my colleagues to stand up for the everyday American investor And don't sit here and give support to these billionaires and these big corporations and allow them to come in and basically decide what the SEC is going to do. Is it going to follow the law? Is it going to give them advantages? Is it going to ignore it? What is going on here? Please, this is a necessary and advised piece of legislation, and there should be a no vote from everyone on this legislation. I yield back.
Gentlewoman yields back. Who seeks recognition? The co-sponsor of this legislation, the gentlewoman from Colorado, you're recognized. Thank you, Mr. Chairman. I move to strike the last word. You're recognized for 5 minutes. I want to thank my friend from Oklahoma for working with me on this bill and continuing to work with me to improve it even as late as last night with an updated amendment. As Mr. Lucas explained, this bill would create an advisory committee at the SEC to help the commission better understand and address the issues ranging from capital formation to shareholder voting to compliance with emerging securities laws. An important part of this bill is also transparency, accountability, and it will bring to the SEC on how it interacts with the public company stakeholders. This advisory committee, like the other advisory committees that the SEC operates, will have meeting records, agendas, and notes publicly available online for anyone to see. It is my hope that this committee will produce a more collaborative and thoughtful policy recommendations under the SEC's fully transparent advisory committee process. And I also want to mention a couple of changes that we made compared to last Congress. We consulted and received technical assistance from the Biden administration last Congress, and their feedback made the bill more functional, especially in terms of the board rotation. These changes have been incorporated into the introduced version of the bill. And last, based on a recommendation from Public Citizen, the ANS for the bill removes subsection E, which would have allowed for travel expenses to be reimbursed to board members. While this is a privilege that other board members on advisory committees have, I agree with my friends at Public Citizen that taxpayers don't need to foot the bill. In conclusion, this bipartisan bill is about transparency and thoughtful governance of our capital markets, and I urge my colleagues to support it, and I yield back.
Would the gentlelady yield to me for a moment before she yields back?
Yes, I yield my time to Mr. Lucas.
Thank you very much. Number one, I want to express my appreciation for your cooperation. And you're exactly right. We've worked on this together right up until the last possible moment to try and refine and enhance and improve. And several of the principles that we worked on together, making sure that those other two advisory committees remain operational, the Investor Advisory Committee and the Small Business Capital Formation Advisory Committee, two key elements that address a broad spectrum of things here. Bottom line is this is a necessary step in the right direction and a dramatic refinement as we've gone along. And I want to thank the gentlelady for her efforts. With that, I yield back to the gentlelady.
Thank you. I yield my time. Gentlewoman yields back. Who seeks recognition on Mr. Lucas, Ms. Pedersen's bill? Seeing none, I'll recognize myself to strike the last word for 5 minutes. So this is I think, an important topic with all the issues that have confronted public companies over the past 25 years, having a formal process where there's feedback to the Corporate Finance Division, the Investment Management Division, the SEC commissioners on public companies, particularly as it relates to rulemakings that impact the corporate governance process. I think this is very constructive. I commend the gentlewoman from Colorado working hand in hand with the gentleman from West Oklahoma on this bill, and I do urge a yes vote, and I yield back the balance of my time. Who seeks recognition? Hearing none, we'll move to amendments. Is there an amendment to the Lucas-Pedersen bill? There being no further discussion or amendments, the question now occurs on adoption of the amendment in nature of a substitute. All those in favor signify by saying aye. Aye. All those opposed signify by saying nay. In the opinion chair, the ayes have it. The amendment is adopted. The question now occurs on ordering the bill as amended reported to the House with a favorable recommendation. Those in favor signify by saying aye. Aye. All those opposed signify by saying nay. In the opinion of the chair, the ayes have it. For what purpose does the gentleman from Oklahoma seek recognition?
Mr. Chairman, I request a recorded vote.
Recorded vote is requested. All those in favor of recorded vote, raise your hand. Sufficient number having raised their hand, a recorded vote is ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, a vote on this question is postponed. We'll now move to the next bill. Pursuant to notice, I call up H.R. 7085, a bill to amend the Securities and Exchange Act of 1934 to repeal certain disclosure requirements related to conflict minerals and for other purposes, which was introduced by the committee's vice chairman, Representative Bill Huizenga. The clerk will report the bill, which was distributed in advance.
H.R. 7085, to amend the Securities Exchange Act of 1934 to repeal certain disclosure requirements related to conflict minerals and for other purposes.
Without objection, the bill is considered read and open to amendment at any point. Representative Huizenga has an amendment in the nature of a substitute, copies of which were distributed in advance. The clerk will now report that amendment.
An amendment in the nature of a substitute to H.R. 7085, offered by Mr. Huizenga of Michigan, designated as Heisen 077.
Without objection, the amendment is considered read, will serve as base text for the purposes of amendment. The gentleman from Michigan, Mr. Huizenga, our vice chairman of the full committee, is recognized for 5 minutes to describe his amendment.
Thank you, Mr. Chairman. And you know what? What's old is new again. Here we are, Section 1502 of the Dodd-Frank Act, which requires public companies to scour their supply chain and disclose whether they source, quote, conflict minerals from the DRC, the Democratic Republic of Congo, and its 9 neighboring countries. They call that the Great Lakes region. Those of us from Michigan dispute that, but we can have 2 Great Lakes regions. But my colleagues might be wondering, why now? Why after 15 years are we trying to repeal this provision? Well, let me explain. In 2015, the chairman of the as chairman of the Subcommittee on Monetary Policy and Trade, I held a hearing on this very topic. And let me highlight some key takeaways from 11 years ago. The Securities and Exchange Commission spent 21,000 staff hours and $2.7 million on conflict minerals, a subject the agency admitted they had little to no experience with. While the eventual rule may have been well-intended at the time, and I don't think anyone disputes many of those intentions, it resulted in fewer purchases of minerals from the region, sending thousands of artisan miners into poverty. In fact, we actually had ministers of mining and resources from countries in that area come and testify in front of that hearing. In 2014, a Washington Post article highlighted that the conflict minerals rule, quote, set off a chain of events that propelled millions of Congolese miners and their families deeper into poverty, with many miners forced to find other ways to survive, including joining armed groups, close quote. In 2015, a report from the GAO found that 67% of companies were unable to determine whether the minerals in their supply chain came from the DRC or the surrounding region. Furthermore, no company could determine whether minerals financed or benefited armed groups in those countries. Mr. Chairman, as we saw with the SEC's climate rule during the last administration, the SEC was then and now unqualified to regulate conflict minerals. In 2013, so 13 years ago, former SEC Chair Mary Jo White noted, quote, seeking to improve safety in mines for workers or to end horrible human rights atrocities in the Democratic Republic of Congo are compelling objectives which I, as a citizen, wholeheartedly share. But as chair of the SEC, I must question as a policy matter using federal securities laws and the SEC's powers of mandatory disclosures to accomplish these goals, close quote from Mary Jo White. This was during the Obama administration. When the agency when an agency exceeds its mandate, the agency is no longer regulating, the agency is legislating. So that brings us to 2024, when yet again, the GAO published a report titled Peace and Security in the Democratic Republic of Congo have not improved the SEC disclosure, have improved with the SEC disclosure rule. And Mr. Chairman, I'd like to submit this rather substantive report for the record.
Without objection, it'll be included in the record.
Thank you. The Biden-era report, so we had the SEC Securities and Exchange Commission from Obama. The Biden-era SEC's report found that the SEC's 2012 conflict minerals disclosure rule had not reduced violence in the DRC. Further, the GAO found that the number of violent events in the adjoining countries did not change in response to the SEC rule. The report went on to conclude that although conflict mineral disclosures in 2023 had increased for the first time since 2014, many companies, 62% of them, continue to report being unable to determine their minerals' origins. So that begs the question, what is this rule trying to accomplish, and is it still necessary when it has been determined that it has not moved the needle at all? Section 1502 imposes staggering compliance costs that stifle innovation and growth. The SEC's own estimates placed initial compliance costs at $3 billion to $4 billion, with ongoing annual costs reaching up to $600 million. These expenses directly reduce the returns public companies can offer their investors. I would like to note that these minerals are used in a variety of products like cell phones, cosmetics, footwear, apparel, even auto suppliers, which many are located in my district in Southwest Michigan. Needless to say, every single one of us has someone impacted by this very provision in our congressional districts.
Gentleman's time has expired.
Thank you, Mr. Chairman.
The ranking member, you're recognized.
Thank
you
very much. I move to strike the last word.
You're recognized for 5 minutes.
Thank you. Mr. Chairman, for decades, the exploitation of conflict minerals by armed groups in the Democratic Republic of Congo have helped finance a conflict characterized by extreme violence and mass killings. Section 1502 of Dodd-Frank was drafted to help disrupt this conflict by requiring transparency around companies that use conflict minerals in their supply chains. An article recently published by Public Citizen points a harrowing picture of what happens when we prioritize short-term profits over human life. The report highlights that the DRC holds $24 trillion in mineral wealth, yet it remains one of the poorest nations on earth. This is primarily due to the militant groups that are violently displacing millions of people to control conflict minerals, a crisis that has left 25 million people in need of emergency aid. Section 1502 was designed to break that curse by forcing companies to pull back the curtain, and it's working. According to the Public Citizen article, major manufacturers and some of the largest tech giants have built entire compliance departments because they know their consumers and their shareholders do not want to be complicit in a humanitarian crisis. As another example, a regional mineral certification system confirmed that hundreds of mines in eastern Congo are now conflict-free as a result of Section 1502 reforms. Additionally, the North Kivu province reported record-high conflict-free export numbers in the wake of Section 1502's adoption. If we rescind Section 1502, we aren't just cutting red tape, we're cutting the only form of accountability that prevents a motherboard in Silicon Valley from being built by a child laborer in Congo. My colleagues on the other side of the aisle call disclosures around conflict minerals immaterial. I asked them, since when is the funding of mass rape, child labor, and regional instability in the heart of Africa immaterial to an American investor? This bill was a bad idea when it was first proposed, and it's still a bad idea now. Of course, I'm absolutely opposed, and I don't know why anyone would take their time with something like opposing 1502. What are you trying to do? Are you trying to get, the exploiting companies from America and all over the world to have access to those minerals, working with the worst in the Democratic of Congo? the Democratic Republic of the Congo? Listen, I've been there, and I know what it's like. As a matter of fact, I was part of a team where we went up and we rescued Aristide from the Democratic Republic of Congo. And so, don't tell me that 1502 is no good, it doesn't work. It does work, and what if it's still trying harder to do even better? Why would you care about disrupting something that's trying to do something on behalf of people who are being exploited, who are being misused, all of the things that I've alluded to? Why? Why take the time of the Congress of the United States to say we don't need a 1502? Why take the time to say get rid of it when we have evidence that it is helping out, it is doing good? Why would you be interested? You know, I'm worried about, this imperialism that's going on now with Trump talking about taking the minerals from Greenland. Let's stop this stuff. This is terrible. This is bad. We shouldn't be here doing the work of billionaires and exploiters and those who want minerals from all around the world to do whatever they're doing to get more money and, to me, more billionaires. Let's stop it. This doesn't make good sense. Let 1502 alone. This should not be a primary interest of your, well, no, I can't say that. I don't know what your interests are, but I know you should.
I'm happy to share if you want to yield.
I return.
Gentlewoman yields back. The gentlewoman from Missouri, the chair of the Capital Markets Subcommittee, Ms. Wagner.
I thank you, Mr. Chairman, and I move to strike the last word.
You're recognized for 5 minutes.
I want to thank Congressman Huizenga for introducing this legislation. H.R. 7085 repeals Section 1502 of the Dodd-Frank Act, which requires public companies to disclose whether they source certain minerals from the Democratic Republic of the Congo region. And I'm going to give him plenty of time to explain why it is that he is, in fact, interested in doing so. But I do want to point out something very clear here. The Government Accountability Office, the GAO, just recently confirmed that this disclosure, 1502, this disclosure regime has not, I underscore, not reduced violence or improved security conditions in the region, despite imposing substantial compliance costs on public companies. Securities disclosure is intended to inform investors and facilitate capital formation. When a mandate fails to achieve its stated objectives and does not provide material information to investors, Congress has a responsibility to reassess it. And by accounting for GAO's nonpartisan findings and reassessing this disclosure requirement, this bill returns securities laws to, I believe, its intended purposes. So I urge support of this legislation, and I will yield to the gentleman from Michigan, my good friend, Mr. Huizenga, to further elaborate. Thank you.
Thank you. I appreciate Chair Wagner and her work and the work that we had done when I had chaired the Capital Markets Subcommittee and going back to my time. Mr. Chairman, the ranking member asks what my motivation is, and I'm happy to explain. I want to help people. I want to help people in the DRC and the Great Lakes region of Africa. And, you can roll your eyes, ma'am, but I will tell you, I'll recount what happened when we had our hearing in 2015, where we had government officials and people representing the miners from Rwanda and from the DRC who testified how this rule was hurting them and hurting their citizens. Now, the only people on that panel that defended it were white foreigners who were the consultants making money off of Rule 1502. And you're asking whether it is effective. It's not effective. There is a Obama-era report. There is a Biden-era report. I would reference people to look at the map that the GAO in the Biden administration produced, outlining where the conflict happened in 2010 versus 2022, and where those regions are, where those mines are. It has increased. It hasn't decreased.
And I understand the motivation for putting the rule in the first place. I don't question that, and I don't question the motives. Unfortunately, my motive is being questioned, but I don't question the motive of the people trying to reduce the conflict. The problem is we have to ask ourselves, has it been effective? And the simple answer is no. Is there transparency? No, there is not. Has this, quote, broken the curse? No, it has not. Is it immaterial? No, it's not immaterial, but it's ineffective. And you have to question yourself. When consultants in the West are simply making money off of it and are the only ones begging for this rule, why are we doing it? When it is literally plunging these countries into more conflict. I'm missing a hearing right now. I'm also on the Africa Subcommittee of Foreign Affairs, and I'm missing a hearing right now on the exact conflict that is happening in the DRC and with Rwanda. We had a classified briefing on it yesterday with what is going on. The conflict has increased, not decreased. This rule has not helped. This rule has taken resources away, not just from the companies, but more importantly, from the people that it was supposed to benefit. I will not yield. It's not my time to yield. So, lastly, the courts have repeatedly highlighted the rule's procedural and constitutional flaws. And in 2014 and 2015, the DC District Court ruled that forcing companies to label products regarding their conflict status constituted compelled speech. Ultimately, the court concluded that the SEC failed to prove the rule that would alleviate the humanitarian crisis in the DRC, which still holds true today. My time has expired. The gentlelady said time has expired.
Mr. Chairman, time expired.
Gentlewoman yields back. Anybody seek recognition on Heisiger's A&S? Seeing no new speakers, I'll recognize myself. Strike last word. I want to thank the gentleman for 15 years, actually, or since he entered Congress, being focused on this issue and as a former chairman of the Capital Markets Subcommittee. And you make a couple of key points. People with good faith and good intentions added this into Dodd-Frank with an eye that they could disrupt the corruption in the Democratic Republic of Congo on mining and the labor implications and the worst sorts of human depravity connected to it. But here we are 15 years later, and this particular rule has not been an effective contributor to the diminution of that. And I think that's a key point here. Like, this is the thing so many people have debated here for the last decade. Using the SEC disclosure rules to try to enforce a foreign policy type activity this is a demonstration that that's not an effective use of the U.S. code. One final point, and then I'll yield to my friend, is the downstream effect of this, of people who are far away from the mining of that material that comes into the process. Years ago, there was a company in the upper Midwest that I met. They're a distributor of parts to every conceivable industry. They have something like 2,500 SKUs, units that they stock in inventory in the tool space. And their CFO has to attest to the financial statements under Sarbanes-Oxley that they're fully in compliance to the best of their knowledge with all the laws. And she told me specifically, the CFO, every time I sign my name, I know I cannot possibly certify to the best of my knowledge that our company is in compliance with the conflict mineral laws, because I don't know all the things we sell, what it's made. So the food chain is clogged up, and that's driving up costs for companies that are miles away from the concept of conflict minerals. So I admire the gentleman's persistence at trying to get this right, both on his role in the Foreign Affairs Committee, like legitimately find the right foreign policy, and as a former capital markets chair here, let me yield to my friend.
Mr. Chairman, I appreciate it. And we have to remember the history of this. And again, I am not questioning the motivations of people, even though mine are being questioned. I'm not questioning their motivations as to why, because I agree that this is an important issue. But the question is it effective? And you have to remember, in Dodd-Frank Act, this particular issue received no hearings. It was inserted during the conference process where members were unable to debate its usefulness, its relevance, and to explore whether it would work. And again, we've seen the DC courts rule in 2014 and 2015 under the Obama administration. We saw Mary Jo White, the head of the Obama Securities and Exchange Commission, question the ability of the SEC to do this, both legally and practically. The 2015 hearing that we had with Minister of Mines from Rwanda and from the DRC and surrounding Great Lakes regions that were saying this rule is hurting their citizens, those artisan miners, not children, not children. These are those small miners that are now having to leave mining and go and become armed combatants in the area. And now we fast forward to GAO, study after study, that's showing the ineffectiveness of this. And unfortunately, we have seen conflict maintain and even grow in that Great Lakes region. I want an end to that. I'm looking for those policy ends, Mr. Chairman. Unfortunately, this rule, as well-intentioned as 1502 may be, it is not effective, it is not transparent, it is not actually workable as we are trying to tackle these very interesting, or very, very difficult things. And I find it interesting that we still have people trying to defend the rule who can't admit after study that it hasn't been effective. But with that, I know I'll return that time to you, but I appreciate this. It just seems to me that what we're dealing with today is more relevant today than it was even 15 years ago. And with that, I yield back.
Thank the gentleman. I thank for the spirited debate. I yield back my time. Does anyone else seek recognition on the ANS? Hearing none, we'll move to amendments. Does anyone wish to offer an amendment to the ANS? There being no further discussion or amendments to the bill, the question now occurs on the adoption of the amendment in the nature of a substitute. All those in favor shall signify by saying aye. Aye. Any opposed shall signify by saying nay. In the opinion of the chair, the ayes have it, and the amendment is adopted. The question now occurs on ordering the bill as amended to be reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. Aye. All those opposed signify by saying nay. Opinion of the chair, the ayes have it. For what purpose does the gentleman seek recognition?
I request a recorded vote.
A recorded vote is requested. All those in favor, record vote, raise your hand. A sufficient number having raised their hand, a recorded vote is so ordered. Pursuant to subsection C5 of Rule 3 of the committee rules, a vote on this question is postponed. We'll now move on to the next bill. It's pursuant to the previous order, the chair declares the committee in recess. Subject to the call of the chair, we will reconvene at 3:30 to vote on the postponed votes. The committee now stands at recess. So are we... Committee will reconvene. Pursuant to the chair's previous order, we will now take the postponed votes on the pending amendments to H.R. 7128, the TRIA program. Question is on the amendment offered by Representative Rose. This is Rose 10-045. Going to vote electronically, and the clerk will open the vote.
Challenging, though, it's going to be every morning. I'm going to have to wake up and message the poor speaker.
Oh, why is this not going?
Are we now?
Well, no. There we go. But I'm not going back to my fathers and saying, we're going to have a vote on this. Are we going to have a vote on this? Because
Is there any member who has not voted or would like to change their vote? The clerk will close the vote. Up.
Push your button.
It's hard to vote from the CNN portal. I love it. Okay. Gottheimer. The clerk will close the vote and, hang on, sorry.
One more.
Stand by, clerk. Hola. I'm going to say this very slowly. Is there any member who hasn't voted? Or would like to change their vote? Clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 2 and the nays are 49.
I'm sorry, Mr. Meeks, you missed it. Majority having voted against the amendment is not agreed to. Question is now on the amendment offered by Representative Garcia. This is TRIA Amendment 1. Clerk will open the vote. Is there any member who hasn't voted or would like to change their vote? Clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 18 and the nays are 34.
A majority having voted against the amendment is not agreed to. The question now is on the amendment offered by the ranking member, Mrs. Waters. This is TRIA Amendment 2. The clerk will open the vote.
What's wrong with my thing?
Come on, thing, let's do it. Is there any member who has not voted or would like to change their vote? Clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 18 and the nays are 34.
A majority having voted against the amendment is not agreed to. The question now occurs on adoption of the amendment in the nature of a substitute. All those in favor shall signify by saying aye. Aye. All those opposed signify by saying nay. In the opinion of the chair, the ayes have it. The ayes have it, and the amendment is, in the nature of a substitute, is adopted. The question now occurs on ordering the bill as amended reported to the House with a favorable recommendation. Those in favor signify by saying aye. Aye. All those opposed signify by saying
I
nay.
have requested recorded vote.
In the opinion of the chair, the ayes have it. For what purpose does Representative Flood seek recognition?
I request a recorded vote.
A recorded vote is requested. All those in favor of a recorded vote, raise your hands. A sufficient number having raised their hand, a recorded vote is ordered. We will now take that recorded vote on ordering the bill as amended, favorably reported. The clerk will open the vote. Is there any member who has not voted or would like to change their vote? The clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 51 and the nays are 2.
A majority having voted in favor of H.R. 7128 as amended, the bill is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. We'll now take the vote pending on ordering H.Res. 1007 as amended, favorably reported. Members will vote electronically. The clerk will open the vote. Is there any member who has not voted or would like to change their vote? Clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 54 and the nays are 0.
A majority having voted in favor of H.Res. 1007 as amended, the resolution is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. We'll now take the vote pending on ordering H.R. 7056 by Congressman Barr as amended, favorably reported. Members will vote electronically. The clerk will open the vote. Is there any member who has not voted or would like to change their vote? Clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 33 and the nays are 21.
A majority having voted in favor of H.R. 7056 as amended, the bill is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. We'll now take the vote pending on ordering H.R. 5877, authored by Representative Fitzgerald, as amended, favorably reported. Members will vote electronically. The clerk will open the vote. Is there any member who has not voted, would like to change their vote? The clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 54 and the nays are 0.
A majority having voted in favor of H.R. 5877 as amended, the bill is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. We'll now take the postponed votes on the pending amendments to H.R. 1799, bill authored by Mr. Loudermilk. The first question is on the amendment offered by Representative Lynch. This is amend H.R. 1799-9, and the clerk will open the vote. Is there any member who hasn't voted or would like to change their vote? Clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 24 and the nays are 30.
A majority having voted against the amendment is not agreed to. The question now occurs on the amendment offered by Representative Tlaib. This is Amendment H.R. 1799-15. The clerk will open the vote. Is there any member who hasn't voted or would like to change their vote? Clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 25 and the nays are 29.
A majority having voted against the amendment is not agreed to. The question now occurs on adoption of the amendment in the nature of a substitute. All those in favor shall signify by saying aye. Aye. All those opposed signify by saying nay. In the opinion of the chair, the ayes have it. The ayes have it. The amendment in the nature of a substitute is adopted. Question now occurs on ordering the bill as amended reported to the House with a favorable recommendation. Those in favor shall signify by saying aye. All those opposed signify by saying nay. Opinion of the chair, the ayes have it.
Mr. Chairman,
Recognizing the gentleman from Georgia.
recorded vote, please.
A recorded vote is requested. All those in favor of recorded vote, raise your hand. A sufficient number having raised their hand, a recorded vote is ordered. We will now take that recorded vote on ordering the bill as amended favorably reported. The clerk will open the vote. Is there any member who has not voted or would like to change their vote? Clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 30 and the nays are 24.
A majority having voted in favor of H.R. 1799 as amended, the bill is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. We'll now take the vote pending on ordering H.R. 6967 by Representative Lucas as amended, favorably reported. Members will vote electronically. The clerk will open the vote. Is there any member who has not voted or would like to change their vote? Clerk will report. Mr. Chairman, on this vote, the ayes are 39 and the nays are 15. A majority having voted in favor of H.R. 6967 as amended, the bill is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. We will now take the vote pending on ordering H.R. 7085 by Representative Heisinger as amended, favorably reported. Members will vote electronically. The clerk will open the vote. Is there any member who has not voted or would like to change their vote? The clerk will close the vote and report.
Mr. Chairman, on this vote, the ayes are 30 and the nays are 24.
A majority having voted in favor of H.R. 7085 as amended, the bill is ordered favorably reported to the House. Without objection, a motion to reconsider is laid on the table. Without objection, staff are authorized to make necessary and conforming changes to the bills considered today, and pursuant to House Rule 11, Clause 2L, I give notice that all members will have the requisite number of days to file supplemental, minority, additional, or dissenting views. There be no further business pending. The committee stands adjourned. Thank you all.